Imagine a lake with clear water and unpolluted air. Imagine a website with real news and no hidden, unlabeled, sponsored articles masquerading as real news. That place exists, and it's called Be in Crypto, the first and only cryptocurrency news portal to provide complete transparency and honest news. Pure, relevant, informative. Are you in?
Welcome to the Theta Network. Earn T-Fuel crypto rewards simply by watching live streams and videos. As you watch and share with others, you're contributing to the decentralized Theta Network, all powered by Theta's native blockchain. Discover the future of video delivery at thetanetwork.org.
And I represent the Envelope project. Many things have already been invented in the blockchain today. Tokens, smart contracts, platforms for creating your own coins, NFTs, exchanges for buying, selling, and exchanging all these blockchain resources. Envelope is another step in the development of crypto technologies. The protocol that works with NFT and cryptocurrencies. The idea is simple but disruptive. Let's assume you have an NFT, Bitcoin and Ethereum. Using the Envelope protocol, you can wrap the original NFT accompanied with several tokens. Technically, you get a similar NFT, but what is the breakthrough here? Once wrapped, the token has a number of additional features that were not available before. The minimal cost appears. It is provided with coins wrapped together with NFT. An asset wrapped with Envelope has a number of properties that allow the original author to receive royalties from the resale of that asset. Various rules can be applied to the wrapped token. For example, a lock period for unwrapping. It secures the asset till the determined moment or safeguards it from speculation during the hype period. At the same time, wrapped tokens can be transferred and traded. These are just some of the scenarios for using Envelope. NFTs become more popular, and the tools provided by Envelope expand the opportunities of NFTs utilization. Envelope. Make your NFT valuable. Just practical, no hype.
Hello friends, I'm Ben and this is Everscale News. Q1 is coming to a close and we've got loads of exciting product releases and updates coming each day. If you don't want to miss an announcement, hit subscribe now. Right, let's go. The biggest news this week is the launch of the brand new Scouting Grants program. This awesome initiative is designed to bring new projects to the ecosystem by giving anyone in the crypto world the chance to become an Everscout. What is an Everscout, you ask? Well, it's someone who gets rewarded handsomely for bringing an innovative blockchain project to the Everscale Grants program, so long as they pass the evaluation stage. And another breaking update for you. Broxus have announced the start of the testing phase for EverDAO, a true DAO platform on Everscale. Using WEver, Ever token holders can make on-chain governance decisions for the whole Everscale network. More power to the people. Ton Wallet has rebranded to become Everscale Wallet with some huge updates. Now, it not only supports TIP 3.1 standard tokens, it also supports the Broxus token list and enables removing tokens from the wallet and more. And last up this week, Gate.io has updated the token ticker from the old Ton Crystal, Ton C, to its rightful new name, Ever. As after a brief suspension of trading on March 15th and the ticker change, Gate.io users will now have full access to the appropriately named Ever. And that's all for today. Stay tuned for more updates.
Hello everyone! This is the second day of our 5th anniversary summit, and I'm with you again, Maksim, Sukhonosik, host of the Synopsis Summit, co-founder and CEO of Colibri Group, Coindar, and of course, Synopsis. As always, Synopsis Events offers a complete immersion in digital economy, decentralized finance, and NFT. During the summit, the next topics will be discussed: DeFi, NFT, IVO, financial NFTs, Metaverses, of course, play to earn and move to earn, GameFi, Esports, cryptocurrency exchanges, TA and trading, crypto mining, staking, industry regulations. So, the official partners of the broadcasting is Theta TV. And on the Theta Drop platform, you guys can get the several collections of exclusive NFTs dedicated to the summit and become the owners. The NFT data was developed by the joint efforts of the Colibri Group, Theta Labs, and Coindar teams. We continue to use and develop one of the first Theta Pass implementations to access premium content for the conference attendees via NFT. What does it mean? This means that every owner of NFT Synopsis can get a ticket of a special category, Theta Pass, to unlock the premium features of the ticket, as well as access to premium content and other options in the future. To do this, you need to have an NFT on Theta Drop released by Synopsis and log in into the Synopsis website in the appropriate section, Ticket, Theta Pass. The summit is hosted by the international blockchain consulting company Colibri Group and the leading cryptocurrency calendar markets research service Coindar.org. I would like to take this opportunity to add that now you can follow the events of the crypto industry with Coindar.org in the new Opera crypto browser. Download, use, and enjoy the extremely convenient features implemented in the Opera crypto browser. Co-organizer of Synopsis 5 are Being Crypto and Hello. Being Crypto is an unbiased blockchain media that follows the principles of the Trust Project, a non-profit consortium of media organizations building standards of transparency, accuracy, inclusion, and fairness. Hello is a sustainable and regulatory-friendly decentralized platform that solves the key issues of blockchain technologies through the maximized speed, security, environmental friendliness, and scalability of the proof of ethics consensus. I want to thank our general sponsor, Hello, as well as the diamond sponsors who made a significant contribution to the organization of this event. This is the largest company in the crypto industry: Algorand, ARPA-Chain, Veracity, and Prism NFT. Gold sponsors such as Envelope, Solve Protocol, Gather Network, Bella Protocol, NewPay Technologies, Fairdesk, and Vera Esports also made a no less significant contribution. We express special gratitude to our dear friends and partners who also made a big contribution to the implementation of this event. These companies are Theta Network, Theta Drop, Theta TV, Blockchain, Binks, Sugarverse, Axma, Exip, Musai, Holidays, and Mui Network. So here we start opening the second day of the summit. Synopsis resident, our longtime friend and partner, co-founder EverX, Alexander Filatov, with topic big picture blockchain industry overview and some highlights on the Everscale network. Alexander, you have the floor.
Hi, thank you, Maksim, for the kind introduction. It's a pleasure and honor for me to be at the Synopsis conference again. I think when was it last time? 6 months more or less. And of course, a lot of things changed. We've seen some tough markets recently. That's why I would focus my kind of market and Everscale network update on kind of bigger, bigger picture a little bit than reacting to the falling markets as of recently due to geopolitical and economical reasons on the global markets. So first of all, I think what we're seeing is the role of technology is increasing as some of the segments in the blockchain, like GameFi, play to earn, are emerging. We see some of the chains struggling with the load that comes through the network. We saw that with Solana, we see it with some other networks. And I think that reinforces the point that I was making last time, that we're arriving at the times when scalability matters today. And we're actually very happy on that point that Everscale migrated to the Rust implementation of the network in December last year. And we're currently capable to transact more than 50,000 smart contract executions per second, which is sufficient for the foreseeable future, thinking about the workload. And the good news is that it's scalable. On that note, I was just preparing for the conference. I was just looking at the chart that I'm using, which shows where blockchain in terms of adoption is versus the internet 22 years, obviously 22 years later. And we're actually accelerating. I think the arrival of more, more consumer-friendly products, like, again, GameFi, play to earn segment, obviously continuing growth in DeFi, expansion of the NFT space at large, with metaverses, with cases like, for example, ticketing on the blockchain, and some other notable NFT products that I just don't want to mention for the sake of time. We're seeing actually acceleration, and I think that we're going to see 1 billion users in the blockchain space in the next couple of years, looking at the chart. Moving on to different segments. On DeFi, I think the key trend that we're seeing in DeFi is interoperability. We can see more and more protocols focusing on the bridges and ensuring, easy flow of liquidity from their network to the other networks. On that note, we've made huge progress in Everscale since our last recording and conversation in November last year. We currently enjoy a very comprehensive Octos bridge, which is for a while linked with the Ethereum network. All key EVM chains like Phantom and BNB chain and Polygon and the other ones. We have a very comprehensive bridge with Cardano, actually going inside the Cardano ecosystem and helping to gather liquidity with Tezos, with Chinese BSN. It's not actually a bridge, it's proper integration with Chinese BSN, including NFT. And there are more bridges coming up shortly, with the key top 20 protocols. There is Avalanche thing being in work, Solana is coming shortly, near, and also there is a team in the US working on the Bitcoin bridge, which is coming shortly. So, and the way Octos bridge works, it's almost like an invisible bridge, which helps you to transact between different chains at very high speeds and very low commissions. So that's what I would highlight in the DeFi space. Of course, we see also gradual sophistication of the products, like derivatives gaining a little bit more ground, decentralized exchanges becoming more comprehensive with the order book capability with automatic market makers. We are actually expecting very soon a launch of a very capable DEX on the Everscale blockchain. The current working name is Flex, but I think the final name to the market will be slightly changed to be a little bit more differentiated from in the space, and it will have very fast speed. You can think of the speed of the centralized exchanges and the order book capability and automated market maker and some other features that I don't want to sound like an advertising. So sophistication of the products, which are becoming more and more user friendly and close to the experience that we're getting with centralized exchanges. I would also highlight the growth of self-sovereign identity there is a number of solutions across the globe that are using SSI, and there is a SSI project on Everscale as well, which is finalized as a product and will be implemented into some of the solutions that that are coming up on the network shortly. And that's probably my highlight for the DeFi space. Of course, there is extreme pressure now in the last few days after the crash of Terra Luna, in the last few weeks, and currently, as there is a lot of pressure on the lending protocols currently with the current market situation, as we're seeing. Celsius is struggling. I hope they survive, because that might be another kind of trigger. And many other protocols are obviously struggling big time. But this is, from my standpoint, a temporary solution, which will change down the road. Moving on to the NFT space at large, I think, of course, we all saw the serious decline in basic generative collections, as we predicted 6 months ago. And I think even at the previous synopsis, we were talking about that this is just not sustainable. Nobody is going to buy a collection of pictures, whatever beautiful they are. And you have to work on things like gamification. I think that's very important. And also usability, the practical use of those NFTs. Does it give its owner access to some sort of exclusive events, exclusive communication tools, exclusive communication with their, with their heroes, with influencers, etc., etc. And I think those two things, gamification and usability of NFTs, are going to drive the success of different NFT products. Of course, the big trend of the last year and 6 months is the emergence of play to earn. The most bright one was move to earn, with Stepan and about 20 competitors launching now as we talk. So I think the space is going to be very cluttered. It's going to be difficult to continue to sustain, quick capitalization gains that Stepan enjoyed. There are more play to earn coming. There's in our ecosystem, I know that chessnft.com, the official chess NFT marketplace, is working hard on striking a partnership around the play chess to earn model. And of course, there'll be more and more segments. We see some funny ones as well in the space. And overall, I think the gaming industry is getting more excited with the potential that NFTs can bring. And it's some sort of NFT space as well. It's very much focusing currently on the gaming industry. So it's a move in both directions. On the metaverses, there hasn't been much hype from my standpoint since Facebook announced Meta, when there was an original hype. We can see steady growth of established folks like Decentraland and Sandbox. We can see the Roblox and others getting into the space, but I haven't seen it being so hot anymore. So, which partially confirms that this is not an immediate future, that this is going to be a long-term journey. And also, it's a very multifaceted product that we have with the metaverses. Moving on, I think the next big segment that I would take is a DAO. DAOs are getting quite popular. We're actually, for those who are watching the news in the Everscale ecosystem, there were quite a few recently. There was a big NFT project with Amaze from San Francisco, and we're expecting the product quite soon. And there was one big one, which is Gosh, Git open source hodler, which is a disruption of GitSpace. GitLabs and GitHub, which is Git on the blockchain. And the reason I'm mentioning this in this DAO section is, of course, it fulfills the dream of many developers to move away from centralized repositories like GitHub to decentralized repositories. But also one of the important instruments featured by Gosh is the capability to do DAOs. And it's an extremely easy UI UX. You can actually check it out at gosh.sh. And it's with the support of Docker. It's one of the 15 extensions that were launched within the DockerCon on May 10 this year. So Docker is supporting this, and 12.8 million Docker developers would have access, and actually wider audience as well, developer audience would have access to this unique technology. We've already seen about 10,000 accounts being created and repos being created on Gosh, and it's in final beta. It's not even launched as a mainnet. As I mentioned, it's built on the Everscale technology, and although it's a different chain, it's a fork because of the different tokenomics and security parameters that have to be different for that particular use case. But there'll be a lot of synergies realized between Gosh and Everscale and staking, farming, and in some other ways. And maybe one day, if possible, Gosh would become a work chain on Everscale, which is the ultimate goal. So DAO is the other one that I would mention. And then I'm just kind of seeing more and more use cases shaping up. There's been a lot of talk on the tokenization of real estate and some practical projects. We also have a couple in our Everscale ecosystem. Blockchain is finally getting into the logistics space as well. There are a couple of large projects. It used to be mostly IBM's domain, but now it's on public chains. The projects on public chains. That's kind of my brief outlook on where we are in the space. Regarding the current volatility, as my point of view is that we haven't seen the bottom yet. It's very expected by the analytics because the combination of inflation and changes in the monetary policy in the US and other parts of the world, where there is going to be significantly less capital thrown into the market. And of course, crypto still being quite, crypto at large, of course, there are different segments, is being quite a risky and speculative segment would obviously be very much influenced by that. But I think the rise from there, wherever we fall on Bitcoin and other currencies, is going to be very big, because one of the big changes that I've seen in the space recently, and also in the last 6 months, despite tough market, is continuous inflow of institutional money. Like I saw somebody's tweet the other day that about a couple of years ago, in the large investment banks, it was almost a shame to mention crypto because it means you're kind of weird. And now it's a shame not to think about crypto because it means that you're lagging behind. So different signs like that are popping up here and there. So I'm skeptical on the markets short term in the next couple of months, and I'm very bullish on the markets as they rebound from the bottom, when again things would get better on geopolitical and economic fronts. I wish you a great conference. Looking at the lineup of speakers, as always, it's very impressive. So my best regard to the Synopsis conference participants. Thank you very much.
Hello, friends. I'm Ben, and this is Everscale News. Q1 is coming to a close, and we've got loads of exciting product releases and updates coming each day. If you don't want to miss an announcement, hit subscribe now. Right, let's go. The biggest news this week is the launch of the brand new Scouting Grants program. This awesome initiative is designed to bring new projects to the ecosystem by giving anyone in the crypto world the chance to become an Everscout. What is an Everscout, you ask? Well, it's someone who gets rewarded handsomely for bringing an innovative blockchain project to the Everscale Grants program, so long as they pass the evaluation stage. And another breaking update for you. Broxus have announced the start of the testing phase for EverDAO, a true DAO platform on Everscale. Using WEver, Ever token holders can make on-chain governance decisions for the whole Everscale network. More power to the people. Ton Wallet has rebranded to become Everscale Wallet with some huge updates. Now, it not only supports TIP 3.1 standard tokens, it also supports the Broxus token list and enables removing tokens from the wallet and more. And last up this week, Gate.io has updated the token ticker from the old Ton Crystal, Ton C, to its rightful new name, Ever. As after a brief suspension of trading on March 15th and the ticker change, Gate.io users will now have full access to the appropriately named Ever. And that's all for today. Stay tuned for more updates.
Thank you, Alexander. Guys, I really like Alexander actually, and I think he's an excellent speaker, always cheerful and calm, and like keeps himself in a great shape and delivers incredibly interesting and informative speeches. So, well, really thank him for participating again, as always. So, in the meantime, we look forward to joining our next speaker, Steven Enamakel, co-creator of MahaDAO, with the topic MahaDAO, taking inflation with cryptocurrency. Steven, I give you the floor.
Hi, Maxine. Thanks for having me here. And welcome from the MahaDAO community, all the viewers from the Synopsis conference event. My name is Steven. I'm the co-creator of MahaDAO. And today what we're going to do, what I'm going to show you guys is a bit about what MahaDAO does, show you all the exciting stuff that's happening inside of MahaDAO, and take you through all the exciting innovations that we have been working on. So as mentioned, my name is Steven. I'm the co-creator of MahaDAO. And as you can see, MahaDAO is a DAO. It is a decentralized autonomous organization, a company with no CEO, no COO, no board of directors, no hierarchy, a company that is owned purely and solely by the people itself. So what you're seeing right now is mahadao.com, our website, which talks about what we are trying to do. And to summarize in very simple words, what MahaDAO is trying to create is it's trying to create a new kind of currency, a new form of money, something that is decentralized, something that is for the people, by the people, and something that is inflation-proof and stable. So this is what MahaDAO is all about. We're trying to create the world's first non-depreciating currency. And these are the things that it would do. It would preserve your wealth, which means that it would, unlike the US dollar, it would save your purchasing power over time. So no erosion of the hard-earned wealth due to inflation. It's going to be a stable currency, which is unlike Bitcoin, which is also a currency that people use to protect their savings, but they cannot use it to buy, let's say, a cup of coffee. So MahaDAO is creating a currency that is not really going to preserve your wealth, but will also remain stable over time. And so these are the things of MahaDAO, and it's a two-token system, very similar to some famous cryptocurrency projects like MakerDAO today, where we have the actual currency called as Earth. It is decentralized, it fights inflation, and it saves your money, it saves your purchasing power over time. And then we have the Maha token. The Maha token is the governance token, the token that sort of gives the voice to the Earth token, the currency. And so with the help of the Maha token, people themselves can make changes and improvements to the Earth currency. So it's a beautiful system that we've created, and we hope that the Earth token sort of evolves to becoming something mainstream and eventually changes the world one day. This is the Earth landing page. As you can see, the main pitch of the website is Earth, never lose your buying power. And it's a very powerful message that Earth is trying to give out, which is that when you hold your US dollars or your euros or your British pound or your Venezuelan bolivars, you are not losing the purchasing power of your currency. And so that's what Earth is all about. It is a currency that will never let you lose your buying power. And just to give you an example, if you were to consider the cost of, let's say, 1 cup of coffee today, if the cost of 1 cup of coffee today was worth $5 in fiat currency, over time, what you will see is that the fiat currency gets more and more expensive. And this reason is because of inflation. that the governments are printing money as much as they can to sort of keep the debt low and the economy stable. But this, of course, is not good for people like you and me, the common man who needs, money to pay their regular expenses, buy a cup of coffee or take a taxi or, buy some bread, right? So this does not help us in the long run. But what you see here, while the fiat currency loses or becomes more expensive over time, Earth becomes cheaper as time goes by. So truly a currency that is meant to protect your value. Other things that we're very excited to share with you is the governance side of things to show that Earth is decentralized. It is all powered using the Maha token. The Maha token is a token that allows people to come together and have a voice, just like a democracy, where they can make changes to the protocol and improvements to the currency. So truly, Earth and Maha is a currency that we have designed to be for the people, by the people, and working to ensure that the loss of purchasing power does not happen to the common man. With that being said, thank you so much, guys, for your time. Would request people, if they wanted to find out more about Maha and Earth, simply go to mahadao.com. You find all details on how to get involved with the currency and the mission. And we hope to see you in our Twitter, in our Discord, in our Telegram, and other places where you can hang out and talk about how to make a difference in the world. With that, thank you so much and have a great day, guys.
Welcome to the Theta Network. Earn T-Fuel crypto rewards simply by watching live streams and videos. As you watch and share with others, you're contributing to the decentralized Theta Network, all powered by Theta's native blockchain. Discover the future of video delivery at thetanetwork.org.
Oleg, Smagin, and Jenny Lee from Post Voyager. Hey guys.
Hello, everyone.
Good to see you.
So I prepared a little interview for you guys today. So it's gonna be 8 questions, and let's get to the point. Here we go. So the first question is, tell us about Post Voyager and MUI network by itself. What is this and how it's working?
Yeah, so just to give a brief introduction about what we do, Post Voyager is a blockchain technology company that creates, operates, and maintains the MUI network. So we are a subsidiary of Kokone. Kokone is one of the prominent mobile game developers headquartered in Japan. And Post Voyager plans to develop a metaverse by connecting more than 10 services to this world through partnerships, and the MUI network will be consecutively converting these various services into play-to-earn models. So these services will be provided through our parent company, and it already has more than 20 million users across all its services. So we will also be providing our own network with the wallet and DeFi services to other projects that have high potential but are maybe struggling with blockchain or NFT adaptation.
Okay, it was like so sharp and clear answer. Okay, let's move forward. And the second question is going to be about MUI ecosystem by itself. So just can you please explain to us what is a MUI ecosystem?
Right. So the MUI ecosystem consists of our blockchain, which is a side chain of the Clayton network. And within that, there's a decentralized wallet to manage both fungible and non-fungible tokens, an NFT marketplace, and a decentralized exchange and a cross-chain bridge. So an important part of the MUI ecosystem are the P2E games. So they'll all be deployed on the network. And the utility tokens of these games will inevitably become part of the ecosystem. And in the future, for the MUI ecosystem, it will gradually expand to include more games, more DeFi protocols, and other types of decentralized applications. So right now, currently, we're preparing for our mainnet launch, which is scheduled to happen this upcoming summer. So together with the mainnet, we are testing, we're in the testing phase of all the key blockchain infrastructure that we have developed to enhance our ecosystem. So that includes a crypto wallet, NFT marketplace, DEX, and bridge. So for us, it's really vital to launch all these services together with our first games so that the users can really enjoy our network from the very beginning.
Yeah, it sounds so promising. Actually, you guys preparing a lot of stuff for marketing for your audience. It sounds pretty awesome. The next question is also going to be about MUI, but what is unique value proposition of your network?
All right, so I think one of the fundamental differences that set us apart from other crypto projects, specifically in the Metaverse sector, is that our key partner game developer, Kokone, already has well-established services and IP that we will be actively using to attract users into our network. We actually see that there is a near total lack of very fun games to play in the P2E segment. And in the case of our games, the original non-blockchain versions of them already proved themselves to be very successful. Let's say the first P2E game built on MUI network, that's going to be MetaLively, will be launched shortly after the launch of our mainnet this summer, and a few more games that already have their own original non-blockchain versions will follow after that.
Mm-hmm. Okay, so you just mentioned the game being built on MUI network. It was MetaLively. So could you tell us more about like games on your network and about MetaLively by itself? What is this?
Yeah, so basically our parent company, Kokone, designs and develops mainly avatar games that mainly focus on fashion, clothes, and decorating your space. This specific genre that we specialize on is called CCP. We call it character coordinating play. So if the future games we will work on have similar aspects, it would be easier to convert them because we have already established infrastructure for the development of this kind of games. So it's going to be mostly these CCP, character coordinating play games. As for the MetaLively, our first game, that's based basically a service based on the grand prize winner of Google Play Entertainment last year. That was called Lively Island. Meta Lively users can customize their avatars called Home and decorate their islands to the style they want. And the more fashion and island decorations items you get, the more game currency in the game users will be able to earn. And all those assets you earn inside the game, you'll be able to utilize them inside our MUI ecosystem using different decentralized blockchain services.
Sounds pretty interesting. Actually, it reminded me of the game called what was it? Animal Forest, something like that. Or like any other VR games. So where you can just make some your own collectibles and produce the value for them and exchange with other players. So yeah, sounds pretty interesting.
Some people say Tamagotchi, some people say Axie Infinity. It can remind of games, but as more games it reminds you about, as more popular it can get, because people
the concept
but familiar.
The concept is pretty new, actually. I mean, because it just reminded me a lot of stuff at the same time. So yeah, looking forward to see like the final results. So moving forward, the next question is what is the end goal of the project? Like, I mean, MUI.
Right. So basically what we want to do is we want to help bring more users into Web2 and enhance the user's experience by making them real owners of a product that they already love. So because usually with our games, these games that they get in the app within the game, it's only available for that specific service. But now the value carries over for other users because they have it in their full possession now. So they can buy it, trade it, sell it, and there's just so much more versatility. And when we're using these assets, so it becomes so much more bigger. And now we're looking at something that's not just an item, but rather an asset. So eventually the MUI network ecosystem will be part of the MUI Metaverse, and that will consist of games, dApps, characters, and the virtual economy, which will create benefits for all. So that's really the end goal that we're working towards.
Okay. Yeah, I mean, I have nothing to add. I just gonna say okay. So yeah, the next question is gonna be about your token, and like a small blockchains, a lot of blockchain services, they're providing their own token, and we can see how price is like dumping. So how do you plan to defend your token's price? Because it's really important recently.
Yeah, so our team believes the primary reason for the price fall of crypto is that most of the cryptocurrencies fail to balance the inflation and the utility needs of the token itself. So those two things are something that we're looking at. So we designed MUI's token economics really meticulously so that the inflation rate would be under control. And also we expect that the utility needs of the MUI token will also constantly increase as we introduce more services to the network. So the price of the MUI token will not just be protected, but it will rather increase.
Okay, we'll see. Yeah, how you realize it. So how do you see the metaverses and blockchain games continuing to develop? Just it's not directly related to your project, but I just want to ask you some questions about like the industry by itself. So what do you think?
Yeah, I think what we used to see in the beginning when GameFi just emerged, there were a lot of so-called indie games and games which actually lack the gaming aspect and emphasize only the earning aspect. And still, we see a lot of titles that mostly focus on creating GameFi, DeFi, but still lack the vital aspect of entertainment. I think in the future, it is for gamers, NFT artists, collectors, and brands and marketers. So I think we'll have all those, Web3 benefits like GameFi, DeFi, but we'll also have free A graphics, free A gameplay, and a lot of opportunities for participants, for users.
Okay, so my next question is going to be regarded like this previous question, like more about price. So, as all you guys know, like the crypto winter is already here, and it might be like more winter than now. So, I mean, what do you expect from the industry this year? Because now it looks doesn't look good.
Well, I want to emphasize that the market overall has indeed experienced a turmoil, but if we are talking about the GameFi fields, the growth is actually continuing. I just saw the statistics, and I saw that the number of daily unique active wallets of game dApps has been at an all-time high last month. And when it comes to
Didn't know that.
Yes, it's actually true. Same with the transactions. And when it comes to gaming investments, more than $2 billion poured into blockchain games in the first quarter of this year alone, and it's gonna be much more than last year. Last year, I think it was 4 or 5 billion. So first quarter of this year, more than 2 billion, just one quarter, and we'll see much more by the end of the year. Just to summarize, I think overall, yes, I think that even as the NFT market and many DeFi protocols have been crushed under the weight of the wider market downturn, I think a boom in these sectors, which we saw last year, has introduced a much larger audience to crypto, and it will eventually help the market to recover, and will lead to a much hotter, the hottest summer in crypto, and maybe next year, maybe in 2 years. And I think the likes of our project, MUI Network, Post-Voyager, will come out as winners eventually.
Yeah, I hope so. And it sounds pretty like promising and challenging. Thanks for the interview. It was kind of interesting to hear what you just said and mentioned. I also didn't know like about the number of wallets in GameFi keep increasing, so it was kind of new fact for me today. So it was Oleg, Smagin, and Jenny Lee from Post Voyager. Thanks you guys for attending the Synopsis 5. I wish you good luck with your project, and see you next time. Goodbye.
Thank you, Maksim. It was a great talk.
Imagine a lake with clear water and unpolluted air. Imagine a website with real news and no hidden, unlabeled, sponsored articles masquerading as real news. That place exists, and it's called Be in Crypto, the first and only cryptocurrency news portal to provide complete transparency and honest news. Pure, relevant, informative. Are you in?
Welcome to the Theta Network. Earn T-Fuel crypto rewards simply by watching live streams and videos. As you watch and share with others, you're contributing to the decentralized Theta Network. all powered by Theta's native blockchain. Discover the future of video delivery at thetanetwork.org.
The next speaker I want to introduce to you is Philip Balkanski, co-founder at Sugarverse and Print, with the topic solving broken long-term economics of P2E in the sweetest possible way. I will also take the opportunity to inform you of the insights that in the next few days, we're launching a major airdrop with Sugarverse in the interactive area of the summit. Stay tuned and get involved. Philip, you have the floor.
Hi, Maksim. Thank you very much for having me on the Synopsis event. I'm so happy to join you and to share more information about our project, which is called the Sugarverse. Let me give a little bit of information about myself. So my name is Philip. I'm the co-founder of the Sugarverse. My background is predominantly in tech and products. Over the last 10 years, I have been building startups, in particularly Print, which we grew it together with some friends to the largest printing network in the UK with hundreds of thousands of users. Being particularly focused on products and product-led development has been kind of a passion of mine, of practically developing features which have been used for millions and millions of times from our clients. So a little bit more about the Sugarverse. Me and my co-founder Nikolai, we have collectively invested into many Metaverse projects, and we kept on seeing the same problem over and over again of how sustainable their economies are. And that's what kind of prompted us to start the Metaverse project we're in, the Sugarverse. So we will cover some key elements of the project in the next couple of minutes, something like starting from the game fantasy, the Metaverse objectives, the main pain points, the problems we're trying to solve, and taking a deep dive into our economics, and then moving on to the long-term feasibility of our project. If we just start with just describing the Metaverse, so what we're trying to build is a magical Metaverse, which is made up of 7 planets and 7 mobile games. The world fantasy is based around the candy theme. Now, where kind of Earth has run out of sugar, there's absolutely no sugar left, and we've set out a brave few, kind of shot them in the space and then send them towards a distant galaxy to explore the newly formed Sugarverse. You can watch the trailer and get a real feel of the kind of the game fantasy. Where we envision a Metaverse, which each planet has its own mobile game, and we're highly focused on bringing casual mobile games rather than AA listings or hyper casual, is that particular segment. And we chose that segment because it's really easy for the gamers, and we can actually bring crypto and non-crypto gamers together, and that's really important for our project. So if we talk more about our first world and our first game, so all players will have access to the first planet and the first mobile game. So for our first game, we've chosen to build an infinite runner mobile game. It's because it's so popular, the genre with the players, and it's also really easy to play. So we're gonna get a lot of players who are familiar with actually using this type of mechanics in the game mechanics and everything. So we're kind of hitting for the wider spread of the audience there. Now, our mobile games will be available in single player and both multiplayer. But just before you can start playing the mobile games, you need to purchase an avatar from our marketplace, and then that allows you to kind of compete with others inside the Sugarverse. So the whole kind of idea is that When you have a planet, on that planet, you can buy lands, build buildings, upgrade your buildings. Each one of them is an NFT of their own. But in general, the better your buildings you build, the higher your earning potential. Same with the mobile games. The more you kind of invest back into your character, you have higher kind of earning potential. And simply because the mobile games are both single player and multiplayer, users can participate in really fast-paced, high-earning potential games. And that was really important as well, is to focus on how fast players can actually benefit from the earning potential of our games. Now, just moving on to the actual objective of our metaverse. So when you play the games and you participate in the metaverse, you earn something called G-Candy, which is our in-game currency, which I'll explain a bit more later in the presentation. But in essence, what you get is you can actually exchange it to candy, which is our token version of the currency. And the objective of the metaverse is to play the games, earn loot boxes, and build your buildings and explore what's underneath the planet. And you collect enough NFTs, which are called spaceship parts, to actually assemble your own spaceship and allow you and also your guild members or your friends or anybody who's actually paying you to take them to a second planet, which actually gives you the chance to play the second mobile game, and so on until you reach the 7th planet. The cool thing here is that you actually have each planet has a higher earning potential compared to the previous planet. There is a very clear objective how to progress through the Sugarverse. If we just take a look at the problem we're solving, and just taking kind of a minute to talk about the economics of most play to earn games currently they're in the market. The play to earn part is not always viable. If you don't have new players which are signing up at a constant rate and buying NFTs for your economy, it doesn't actually add up. So if you take a look at games like play to earn games such as Axie or move to earn games such as Stepan, if we look at the long-term development of the project, it's quite difficult to justify how they're going to sustain that constant need for new NFTs to be bought in order for all their players to cash out. Now, this is the problem we actually noticed when we first started investing into metaverse projects and to looking at their economics and reading their white papers and everything. Is just how the question kept on rising: how are they going to sustain this? How are they going to be investing so much into marketing, attracting new players? And throughout the long term, this is going to be a problem. So because the models rely on most players entering the game at peak times, that kind of makes it really difficult for them to break even on their investment, because you constantly need this new NFTs and new players, and supposedly your price for your token price keeps on going up and just becomes really unsustainable. Now, the model is also highly reliant on the constant flow, as I said, of new players coming in for old players to cash out, and this is definitely a problem. And we solve this in 3 major ways. Now, as I explained, one of the main differences here is the kind of relationship we have between G-Candy, which is our in-game currency, and also Candy, which is our token currency. So this is the first kind of solution we have, is that when you play the games, when you get rewarded in the metaverse and inside our play to earn games, is actually with G-Candy. Now, this is important because we actually manage the exchange rate between the in-game points, the G-Candy, and also the Candy. So players can always be guaranteed a steady income from the games. And this is really kind of important because if you look at something like Stepan, one day you make $100, the other day you can make, right now you can make maybe $10 for a run, which is a massive kind of variable, and it doesn't give the predictability the players want. We're also introducing a new earning model for our multiplayer game. So where anybody can earn up to $100,000 in a single game, and I mean by anybody. You might be a player who's playing for a year. You could be just joined a few seconds ago and play your first multiplayer game. It's really important to actually notice that because we give you the chance to earn up to 100,000 in a single game, but also you're not guaranteed that you're going to win anything. Now, this is a model which is mathematically proven to have an even distribution of winnings amongst the community. And this is one of the main channels, is that the revenue from the lost earnings from those players who join our multiplayer games, obviously there's one winner and two losers because our format is a 3-man multiplayer scenario in the PvP section of our game, is that the two earnings which are lost, in essence, is actually gone into a community treasury. And this is the third way, is that we mitigate the constant need for new players, is that we have ongoing revenue models, such as the lost tokens and et cetera, and we send portion of those tokens to our community treasury, which are then actually split quite evenly between reward mechanisms and then burning. And then you can see here that is that when we have those tokens being distributed in such an even way, we can actually sustain the economy with a very low number of daily active players, which makes our project incredibly unique in such a way. Now, because also the fact that not everybody is going to be a winner, and because it is mathematically proven that this kind of creates the most evenly distributed way of rewarding a community, kind of makes our games quite fair when it comes to how much time you put in and then how much you actually invest into the game against how much you actually earn. Now, and because of those models, and because we have the sustainability in the long term, now we have extended our roadmap up to 2026 and beyond, which kind of gives us the confidence, and we want to portray that confidence to our investors, to our players, that we are here, our project is here, our kind of economics works really well, and everything is made for the long term. So we do want to create this sequel, this saga of having 7 worlds and 7 games, and then if there is interest past that, sure, we can extend that. So the model is built for scalability. The game is built for scalability. The metaverse is scalable. Everything which is made inside is really scalable. And kind of, if we're talking about scalability and how we're going to scale the project and what's the future of the Sugarverse, kind of moving in naturally to what's our plans for the Sugarverse. So one of the major plans we have is that we plan to partner with confectionery brands such as Mars, Cadbury, Toblerone, and anybody who kind of creates the sugar content, that sugar bars, chocolate bars, candies, anything. Because it has become such a trend with major brands to collaborate with Web3 metaverse projects, we've created this candy world, which is completely unique to us, and is the perfect place for those brands to actually participate and to actually place their products. So our designers have already prepared really cool mock-ups, which we're actively going to spread to those brands and to show them how they can create worlds together, such as having Toblerone mountains or Mars bars for trains and buildings, etc., and vehicles of such a way. There's so much potential. And looking at the FMCG sector, it's one of the largest sectors out there, right? So confectionery, food, drinks, things like that is huge when it comes to marketing, looking at ways to differentiate from their different bars out there. So it's going to be really cool to actually partner with those brands and to bring them into the metaverse, into our metaverse, and to help them kind of achieve this metaverse experience that they might not have with different projects out there. And the second thing that's kind of we are really keen on is to actually prove the concept with our mobile games. And then actually we plan to partner with studios worldwide, so gaming studios worldwide, and become a publisher, so we can create a really great ecosystem for our gamers to actually benefit from. So we can, for example, bring games and integrate the candy infrastructure into their games. So it doesn't even need to be play to earn games. It could be just a natural game. They can create an extension to that game, which is a couple of levels, which are play to earn levels within their game, which are candy based. And then they can actually reward their players from our tokens and our in-game currency, G Candy. So we can actually grow this into a massive kind of publisher network of games. And then we have the 7 core games, 7 worlds, and then we have a massive layer underneath with our published games. They actually integrate our SDKs and our technology to actually power their play to earn elements within their games, or even just completely changing their games to a play to earn. We're in talks currently with many studios, seeing how they work, seeing how they operate, doing our research, making sure that we are perfectly positioned once we actually launch at that stage to actually grow that segment and really satisfy our gamers with more and more content for them to explore the Sugarverse. So yeah, I think we pretty much covered all the talking points we have for today. And I think you have a much better understanding of where the Sugarverse project started, how it started, where it is right now, what we're trying to achieve, what problem we're trying to solve, especially that problem with the longevity of Metaverse projects. And also where we're heading, which is incredibly important and super interesting for us. And we're so excited that you guys could tune in. For all the viewers out there, we're really happy to share this with you. If you have any questions, please feel free to get in touch with us, Discord, Telegram, Twitter, anything. Also our website, check it out, watch the trailer, etc. And also massive thanks for the organizers of Synopsis event. It's so great to be part of such a thriving community of crypto and blockchain enthusiasts, and the event is great and all the effort behind it is tremendous. So big thanks for organizing that. And yeah, it's been real great to be part of it. So thank you very much for your time. And if you do have any questions, please feel free to get in touch.
And I represent the Envelope project. Many things have already been invented in the blockchain today. Tokens, smart contracts, platforms for creating your own coins, NFTs, exchanges for buying, selling, and exchanging all these blockchain resources. Envelope is another step in the development of crypto technologies. The protocol that works with NFT and cryptocurrencies. The idea is simple but disruptive. Let's assume you have an NFT, Bitcoin and Ethereum. Using the Envelope protocol, you can wrap the original NFT accompanied with several tokens. Technically, you get a similar NFT, but what is the breakthrough here? Once wrapped, the token has a number of additional features that were not available before. The minimal cost appears. It is provided with coins wrapped together with NFT. An asset wrapped with Envelope has a number of properties that allow the original author to receive royalties from the resale of that asset. Various rules can be applied to the wrapped token. For example, a lock period for unwrapping. It secures the asset till the determined moment was safeguards it from speculation during the hype period. At the same time, rep tokens can be transferred and traded. These are just some of the scenarios for using Envelop. NFTs become more popular, and the tools provided by Envelop expand the opportunities of NFTs utilization. Envelop. Make your NFT valuable. Just practical, no hype.
Bears and bulls are the two driving forces of the crypto market, depending on who buys and who sells. The bear, his superpower is to make money even when the market is down. Bear's strategy is selling short and provoking a supply increase. The bull, the whole bull's life is dealings for a rise. His main goal is a growing market. Bull is optimistic and pluckily beats first. The confrontation of bulls and bears lasts forever, and as its price depends on who leads the fight. Choose this strategy and make profit.
Hidden, unlabeled, sponsored articles masquerading as real news. That place exists, and it's called Be in Crypto, the first and only cryptocurrency news portal to provide complete transparency and honest news. Pure, relevant, informative. Are you in?
So thanks, Philip. And now we're waiting for several participants to join at once because it's time for our heated, incredibly interesting panel discussion with representatives of prominent reputable companies and institutions, including the American Research and Policy Institute. Medicine and blockchain technology is a hot combination that can take the medical market to a new level, actually. I represent you, my colleague, panel discussion moderator, Ahmed Abdurrahman, partnership manager at SolveCare, and guest speakers, Dr. David Randall, executive director at American Research and Policy Institute, ARPI, Jason Friedman, host of a Chain of Blocks YouTube channel, and Pradeep Goel, CEO at SolveCare. And the topic of the discussion is healthcare sexy enough for crypto? Meet our experts.
Thank you, everyone. It's a pleasure to have you here today. First and foremost, I'd also like to give a sincere thank you to Coindar and Synopsis for the panel discussion, for having us here today. We definitely have a very pleasant lineup of individuals, very well experienced, to speak with us today. First and foremost, we have Dr. David Randall, who currently serves as the resident scholar with the American Research and Policy Institute in Washington, D.C. He also serves as a strategic advisory board member for the SolveCare Foundation. We also have Mr. Pradeep Goel, of course, who is the CEO of SolveCare. He has been at the top of the INC 500 fastest growing companies multiple times, and he has been listed as one of the 100 most prominent entrepreneurs worldwide by Goldman Sachs, and he was the former CIO of Blue Cross Blue Shield. And last but not least, we of course have Mr. Jason Friedman, who has his own YouTube channel with close to 100,000 subscribers. He is dedicated to increasing community knowledge on blockchain, crypto, and distributed ledger technology. And he offers a simple explanation to all people to be more educated on this topic today. So panelists, thank you very much for your time today. It's a sincere pleasure to have you all here today. We of course have some very unique and exciting questions to get into. But before we get into that, I'd like to give you each just a couple more minutes to elaborate on your background and to introduce yourselves a little bit further. So Dr. Randall, if I could first and foremost pass it on to you.
Sure, thank you, Ahmed. Pleasure to be here. As Ahmed mentioned, I run and am the resident scholar with the American Research and Policy Institute based in Washington. It is a small healthcare-centric healthcare technology think tank. Most of our research is in the healthcare space, and very specifically Medicaid, Medicare, various aspects of health information technology, including fraud, waste, and abuse, data analytics, and of course, some of my published research with Pradeep is about the applications in healthcare, specifically using blockchain technology and applications.
Great. Thank you for that, Dr. Randall. And Pradeep, if I could please pass it over to you for a brief introduction.
Thank you, Ahmed. Thank you, Coindar and the team for giving us this opportunity to get together and speak. My name is Pradeep Goel. I'm the CEO and founder of SolveCare. My background is healthcare. I've spent 35 years in healthcare in various roles, from commercial insurance to public programs. Of course, I'm a parent, which means I have experienced healthcare as a consumer and as a patient, like we all have. And I got into the idea that there is so much inefficiency in healthcare that directly affects our lives, our children, our parents, that we need to do something to streamline the most regulated but inefficient industry that I believe exists on the planet. But healthcare is my love and passion. I've spent all my life in it. And despite its woes, it serves a very critical function in our lives, which is to make sure that we are healthy, and when we do need help, we get it. Inefficient and ineffective as it might be, healthcare is a worthy pursuit, and in my opinion, a right for every single human being. I got into blockchain in pursuit of the idea that we need to build a patient-centric system like Salesforce. We need to build a health relationship management system similar to CRM in business. Let's build an HRM. And let's do it in a manner that empowers the patient, the doctor, family members, our grandparents, our kids, to have exercise the appropriate level of control over their identity, their data, and their choices. So the vision is Salesforce.com, built on blockchain with the unique rights and capabilities granted to the participants, where they own and control their data, their access to their services, access to their identity. And in doing so, we really flip the whole compliance, governance, risk, liability, adoption equation on its head. And blockchain became the essential ingredient of achieving that vision. So we didn't find blockchain because we were looking for blockchain, but rather we found a serious problem in healthcare when looking for a solution, and found the blockchain to be the perfect solution for that intractable problem in healthcare. Who controls the data? Who owns the data? How the data is used? And how does a patient get engaged? So that's what SolveCare is doing. And I'm delighted to be here with these panelists who are extremely experienced in their own right and have this conversation today.
Thank you, Pradeep. That was tremendously informative. And last but not least, of course, Jason, if you could kindly elaborate a little bit further on your background.
Yeah, absolutely. Thank you guys for having me. I might have a little bit of a different perspective. So my background is actually in network systems administration. That's where my schooling is from. And then I got involved in actually a traditional payments company. So kind of straight out of schooling, went to work for basically a third-party credit card processing company. And then back in 2017 was writing articles, had a website, writing articles about these different blockchains that were up and coming, Polkadot, Cardano, when they were just basically building them up. And then I transitioned from the website to create the YouTube channel. And the whole focus was, we have this new technology, which is being introduced to us in through a financial lens, but it won't end there. And I thought, people want to know about this. They want to know more about this, but maybe they don't know where to start, and it's a little bit overwhelming. So that's why I started the channel, to try to take some of these concepts of blockchain technology, apply some different simple analogies so people can really wrap their head around it and understand the finance part, but also understand where we might be going as we look to the next 5-10 years. And then I got connected with SolveCare a couple of years ago. Just really liked the team and what they've been doing. And it kind of goes with my whole mindset as well, that just finance is just one piece in this whole puzzle as we build this decentralized web moving forward. That's kind of where I got involved and where I'm moving forward to.
That makes sense. Thank you for that. And I did have a chance to look through your channel. It was very helpful, very educational. So thank you for sharing your insight. So we do, of course, have a very informative list of questions to go through today. And really what we'd like to discuss in a broader context with all of our esteemed panelists today is looking at combining the context of healthcare and crypto. So we've really streamlined it into a bit of a very polarized question, but rightfully so. And that is healthcare, quote unquote, sexy enough for crypto? So each of our panelists, of course, have their unique context in terms of their understanding, their experience. So I'd like to put that question out there as an introductory question to really set the scene and lay the foundation for the conversation. And maybe we can start with Dr. Randall. To that question, is healthcare, in your opinion, quote unquote, sexy enough for crypto? Is it something enticing enough? If you could share your thoughts.
Right now, I would say no. Will it be? Yes. And the reason why I place a caveat on saying a resounding yes is that the healthcare system, especially in the United States, is like a large battleship, very difficult to maneuver, very difficult to change course, very difficult to introduce new ideas. So like most policy changes in the US healthcare system, and I think for the most part in most industrialized countries in terms of their systems, most notably in Western Europe, change will have to be incremental. That is the policy path that, as an example, both Medicare and Medicaid have taken over time. Most insurers generally follow public health systems in the US. So I think that over time, yes, there are a whole host of applications within various aspects of the healthcare system that we can certainly speak specifically to, that I think are ready-made for blockchain applications, and specifically the use of crypto as a payment mechanism to have more efficiency in the system.
Fair enough. Yeah, appreciate that insight. And it's good to look at it within that overall picture of a larger, more kind of grander context. Pradeep, if I could turn to you to kind of get some of your insights on this question from a macroscopic perspective.
I think the question, how I interpret it is crypto sexy enough for healthcare? Because to me, healthcare is about people's lives, their well-being. When you're sick, you are unable to perform anything in your life, and the greatest impact on anybody's, well-being in the future is when they lose quality of health, and quality of care follows, or lack of. So I think that we need to really be very specific. How can crypto help healthcare? And let's be very pointed. First, crypto can help manage my data. And then when I'm speaking of crypto, I'm not talking about Bitcoin and Ethereum. I'm talking about well-designed tokens and assets on healthcare, on blockchain, that are distributed, that allow us to program these tokens to perform specific functions. I'm not talking about store of value. I'm not talking about, just a smart contract framework. I'm talking about programmable money. I'm talking about programmable digital tokens that can be configured to achieve certain decentralized functions that, if they were decentralized, would work really well. For example, be specifically, my identity could be tokenized where I can share it with my doctor. Along with that token goes my copay, my out-of-pocket maximum, about all the things that the doctor needs to know for them to be able to treat me quickly. There are three parts to being treated. We can address each three with a crypto token. First is who I am. Second, what is my medical history and what are my medical red lines? And third, who's going to pay whom how much and how much I'm supposed to pay, and so on. Three parts. So who I am is easily tokenizable, but I should not have to divulge my entire history to get care. So a well-programmed token, similar to what we are doing with care cards and soft token, would give me, my doctor, complete and appropriate understanding of who I am and who's standing behind me, the insurance company, the employer, my own finances. The second is, what is my clinical and medical history, where to get it? Let's stop pretending that there can be a single blockchain where all medical data will be. Not going to happen. It's a wrong idea. But what is the right idea is that my token tells them where the data is, and they could give them the permission to go see it. Okay. So a token that gives the doctor access to my data rather than a store of all data is the right answer. And the third thing is the payment. Doctor expects to get paid for this service, and who's going to pay it? My token could be redeemable against my wallet, or it could be redeemable against an insurance company's wallet, or both. Voila, you're done. So if you just look at three things that we could do, we could improve the patient's identity control and management, HIPAA, GDPR, all that gets taken care of a lot easier. How to get to my data? Not that even I, patient, don't have all the data about me. Come on, guys, we all know that no patient has singular and complete record of all their medical history in their hands, because that's impossibility. No matter what technology you use, the data is going to be distributed across various systems, but I have the right to go get that data, and I can delegate that right through my token to a doctor. Simple enough, okay? Complex to do, but it's a simple idea that really does work well. And the third is around who's going to pay, and I should give the token to the doc so he can get paid, redeem the token against my wallet or doctor, insurance company's wallet, my employer's wallet, my government's wallet, and get paid real time, which would make them much more likely to take care of me, even if they don't have a direct relationship with me. Three ways we can really help change healthcare. You do those three things, every healthcare system on the planet can be done better. So is crypto sexy enough for healthcare? Absolutely. But we got to stop talking about Bitcoin, Ethereum, store of value, and fungible tokens as non-fungible tokens. And we need to think about programmable tokens that actually can be programmed to serve the needs of the patient. You do that, you're done. That's why I think crypto's time has come. And I do believe that the next 5 years will look nothing like the last 50 years. I believe we're at a tipping point with very specific reasons why I believe that, where we will now start to see adoption in healthcare, where adoption in healthcare has been anemic because the focus has been on, as Jason said before, on financial transactional capability. And that focus has put in the building blocks in blockchain technology, layer 1, layer 2, layer 3, layer 4 solutions, in acceptance of simple things like scanning a QR code is now an acceptable way to pay. So The foundation has been laid by the hard work of millions in the financial sector, but that same platform, the same technology, the same cultural acceptance of digital assets, now is the time for healthcare, and healthcare will rule the day. One more thing that I think why crypto is now sexy enough for healthcare is COVID and the pandemic. We all moved to digital health, all of us, right? My wife got sick yesterday. She was like, I don't want to go to the doctor. Do I have a telehealth option? This is the lady who loves to go and sit and chat with the nurses and the doctor. She feels like she's being heard. She's like, no. I just want to do a telehealth call. This is a transformation happening that is driving the movement for crypto. So I believe that crypto is becoming sexy enough for healthcare, and it's approaching fast. But the crypto industry may not know it, but healthcare industry definitely sees it.
Makes sense. I really appreciated that perspective, Pradeep, and I like how you flipped the frame to look at it from that lens. And like you said as well, COVID has really set a new baseline for us, so that's really changed the lens as well. Thank you for that. Jason, if you could kindly provide some of your insights on that topic as well from your perspective.
Yeah, just to add on a little bit there. So you talk about sexy, it's like something that's attractive. So there's an attraction there, something you would want to do or use. And I think just to build on what Pradeep was saying initially, like when they were building SolveCare and building this new, what he calls HRM, this health relationship manager, they weren't necessarily looking for blockchain, but it just happened to be a technology that worked for them. So I think, as people start to expand their thinking and their boundaries a little bit and just start to experiment with what is actually possible, you start to understand that is the attraction right there. And it might, start with the providers, bringing this new technology to their patients. But at the end of the day, one of the beauties of blockchain technology, distributed ledger technology, any way you want to look at it is, and it's the sign in the back that I have right there, less trust equals more truth. So, less trust in people, putting that into protocols that we know are trustless and work correctly all the time and don't have these things like greed and all these other external factors, really does lead to a more, a better situation for everybody involved, especially the patient. So I think it's just about experiencing what the technology can do outside the boundaries of finance. And that will lead to this, creation of attraction and sexiness, I think, moving forward.
Makes sense. And I like your comments on looking at how we can actually see the benefits for both parties involved. And once that's visualized to a greater extent, I agree with what you said. That makes perfect sense. So focusing on some of the momentum that we developed during that starting point, really when we look at this from a bird's eye view, as we had mentioned previously, is there a true specific nuanced yield that we can identify for crypto and healthcare? Is there any kind of gem that we can identify is really the truest yield producer? Dr. Randall, or if you could share your thoughts on that.
Boy, that's kind of a difficult question for me to answer. I'm going to give it my best shot, though. I think, to go back to my initial argument about policy change and health systems generally, I think looking at incremental approaches, I think, is the best potential for yield, as you frame it, within any healthcare system, whether it's public or in the private markets as well. So one example that I've researched and published about is looking at a little known, little researched area within both Medicare and Medicaid, and that is non-emergency medical transport. That is by numerous GAO, General Accounting Office studies, is ripe with fraud, waste and abuse, a lot of waste. And some estimates that I looked at, and one small data set that I analyzed for this particular publication, it's probably as high as 40%, meaning most of the rides that folks are taking at the government's expense are really not necessary, or for that matter, not what they should be. If you apply blockchain the way that Pradeep has described it, the way that the SolveCare platform can function and operate, not to be parochial, that could be a direct example in terms of providing both efficiency and reducing fraud, waste, and abuse to garner real yield, real savings within those public programs by having accountability, having a permission-based app with a company like Uber or Lyft to coordinate and to document these rides that the government is paying for these specific populations.
Thank you for that, Dr. Rundle. And I definitely empathize. It is a bit of a challenging question to answer specifically. I can definitely empathize with you in the context of several of my conversations from people of a variety of specialty areas. Everyone seems to have a very unique understanding of the nuanced appreciation of the value it can provide, and there definitely seems to be an abundance, but I appreciate your insights on that. Pradeep, from your perspective, if you could share some insight on this as well.
I'll start macro and go micro.
Sure.
Healthcare, last known number, global healthcare spend was $8,800 billion. I think it was 2021. What is 1% of 8,800 billion? Is 88 billion, right? So if you were to simply look at empowering healthcare transactions on crypto at dirt cheap rates, you would have a $100 billion revenue stream, new revenue stream. But at the same time, in my former role as a Blue Cross executive or as a public program administration experience, that would be a fraction of the cost I incur today, a fraction. Because the cost of adjudicating, meaning checking a bill to be accurate, is more than what I just described here. More is spent on checking whether the bill is worth paying and is it accurate than the numbers I just told you. So if you were to simply eliminate the need to check a bill and digitize it, tokenize it, you would save hundreds of billions. But 1% of healthcare spend is 80 billion. And if you were to simply optimize the healthcare payments on a trustless system, you would easily get to a vast adoption. Now that's revenue of Facebook, okay? That's not that far from revenue of Amazon not long ago before the pandemic. So you can build a new $1 trillion infrastructure economy easily by just optimizing what we are currently doing without changing it. But now let's go micro. Why the heck would we continue with a highly inefficient system? What if we could actually do away with eligibility, verification, pre-authorization, utilization management, case management? What if we could actually get away from adjudication and payments in healthcare? And if we just to take US, all the US is by no means the world, but $4 trillion a year are paid out in healthcare each year. If you were to just streamline the billing and payments in the US, that's again $100 billion a year crypto utilization without doing any of the risk taking that goes with crypto today, without taking a single cent in risk. If you automate that payment mechanism for healthcare, where you automate billing, automate adjudication, automate payment, make the payment real time, and reduce the amount of effort it goes to checking and paying a bill, you would generate 100 billion easily in crypto utilization. I think you'll actually generate about 4 trillion in crypto utilization. It will dwarf anything that the crypto has ever seen, blockchain has ever seen. Then let's take another third. So that's one angle. Just simply optimizing healthcare payments within the United States represents an annual revenue of over 100 billion with your eyes closed. Far more, but that's sort of like and I would say Dave can confirm those numbers or challenge them because he knows numbers better than I do, the current numbers. But these are macro numbers, and I have seen them repeatedly shared. The second part of it is the avoidance of human suffering and cost that you would go with if you simply were to improve access to care. Simple thing, a token in my wallet tells the doctor who I am, what my red lines are. Pradeep is allergic to penicillin. This is his age. He's insured by no one. He's self-pay customer. His parents had the history of diabetes. That's my profile. That's not our medical data. That's just my medical profile. And then there is all the access to medical data, which they don't have access to because everything is locked up in 5 different, EHRs or EMRs, somewhere, electronic health records. But if I could simply give them a token that they could use to access my data, that would streamline my care. And the amount of economic loss that goes with avoidable injury and delayed care is unbelievable. It's another probably $10 trillion a year that we lose to disease, and I don't know the number because there's no way to compute it, but as much as we spend on healthcare, we actually lose far more than that in productivity of people who are not able to work, clearly. So there is this enormous impact on society, and that's just US example. You take the third example to access to care in all the underdeveloped or countries where the ratio of doctor to patient isn't so great, or specialty care is very hard to get, and you are able to break down these barriers that exist between patient and doctor, economic barrier, access barrier, identity barrier, risk barriers. And again, you can program a token to address any number of those things, which get into very interesting use cases of crypto, such as me being able to consult with a pediatrician in, let's say, Scandinavia, where I can share my son's records easily or share his identity and data without them having a risk of not getting paid or having a liability that they cannot overcome. So those are all programmable tokens. Think of them as smart contracts written for healthcare, okay? But that are transportable. They're not blockchain specific, they're patient specific. If you could write patient specific smart contracts and have them execute on the chain where the doctor can execute a contract with you on the fly, which eliminates the risk and the liability between the two parties, you could solve a lot of healthcare issues, right? So the point of all of this is that, going back to your original question, whether healthcare is ready for crypto or not is not the question. Is healthcare at a inflection point? Yes, that is clearly the question. Will that inflection point challenge all the old ways of doing things? Absolutely, because digital health is not going to work well in the traditional physical delivery model and control model. And distributed records, decentralized consent, decentralized identity, and decentralized payments are essential to where healthcare has arrived at in the last 2 years. And if not crypto, then the only other alternative is, create an Amazon type company, give them all the control over everybody's healthcare and pray. Okay, and that's not going to happen. I think we are all seeing that society as a whole is now becoming less trusting, which is a good thing. And nobody's looking for a Amazon to control everybody's health data. Okay, we've already given up our social identity to Facebook, and we've already given up our purchasing identity to Amazon. Nobody wants to give up their health identity to a single centralized entity, no matter how benevolent they are at the beginning. So the only real answer for the world at this point in time is to build a decentralized infrastructure that is so robust through adoption and continuous evolution that human beings can trust that to be on their side, where I can trust this chain to serve my patient or my son and not enrich another trillionaire. That, I think, is the opportunity in healthcare beyond everything else. We are used to centralized banks. Yeah, we can decentralize them all day long, but people are used to that. We are used to giving up all our social media identity to Facebook. Yeah, we can claw it back slowly, but people are used to it. But people are not used to having their health data controlled by any Fortune 10, be it Elon Musk or be it Jeff Bezos. I don't want him looking at my health data. They are good guys, but they're not that good. So therefore, the only alternative we have left is to build a solution that people can trust without being singularly controlled by any human being. And that exactly is the opportunity why crypto is becoming sexy enough for healthcare, in my opinion.
Thank you for that, Pradeep. You really brought a lot of attention to a lot of key points. From my perspective, the numbers that you provided really put things in perspective. And what resonates well with my experience as well is the access to care. Of course, having been in those clinical situations myself, there are so many times where access to care is just impeded by basic administrative profile-based information, and to accelerate that is a game changer. So thank you for sharing your thoughts on that. Jason, if I could turn to you and kind of get some of your thoughts on this as well, I'd be very happy to hear that as well.
Yeah, absolutely. So, we talk about transparency and immutability being two very key factors that will work very well when you look at healthcare. But what Pradeep was just talking about is another one. It's going to lead to more efficiency. So as we become more efficient, because we're using blockchain, because we're deferring to protocols that are programmed to do these tasks for us, it may lead to companies in the healthcare realm getting smaller or contracting, or people losing their job that they have right now. But just like with Salesforce, when that took over the CRM world, I'm sure a lot of people lost their jobs, they were doing other things, but instead of crying about it. What do they have now? They just go and build Salesforce apps. So I think what you'll see is a transformation of people going from where they are right now, whether they're an insurance company, claims adjuster, all of these jobs that we have right now, these tasks that are being done right now by people might transfer to protocols, and that'll give the people that are doing them with all of this experience in healthcare a chance to transition and start building out more of a robust HRM with all of these apps you can go. Because I'm not in healthcare, but I would imagine just like Salesforce, everybody has a slightly different need for the platform. So we need to get people building, and it's not just with healthcare. That's how you get mass adoption for this entire industry. We need people to build it out so there's actually stuff that we can use there, and that becomes a yield in itself, obviously.
Oh, without question, absolutely.
I can follow up on that if I may, Ahmed, with your permission. What Jason said is absolutely right. I'll give you 3 very specific points to follow up on Jason. One is we have to allow healthcare participants to build their own apps. We have to enable a physician to author the communication, the care protocol, the care pathway, the prescription card, the follow-up questions in a manner that does not require them to become smart contract writers, but to have the security and the infrastructure capability that communication is secure and that communication is admissible in court and is defensible. But they need not learn blockchain to take advantage of blockchain. So if we bring crypto capability to the physician's desk in a manner that the physician can use, you will get adoption. Okay, first point. Second point is that we need to allow this to be a very regional play. The chain needs to be the healthcare chain as we envision it, as SolveCare is trying to bring a platform, the chain, the wallet, the cards, the token, all that is fine. That's all technology, but the rubber meets the road when a doctor can author a care card and send it to the patient, and that card has all the power of the underlying platform and chain underneath that, and you can attach a token to it to send or receive and act upon that token the way it's meant to be used. So that's the foundation on which a doctor-patient communication can be rethought. So the platform has to exist. And we hear a lot about Web3, and we hear a lot about owning a piece of the web, but really it boils down to owning your identity, your data, and your rights to use or deny services. I mean, it's really that simple. So in that regard, the progression of, as Jason said, we have to allow people to use crypto. What I'm really saying is we have to allow healthcare people to use blockchain in a way that is clinically, financially, administratively, and regulatory-wise relevant. Nobody really cares about the blockchain itself. They care about, can I use it to do something in my life? The third point that I will make is that we should think of tokens not just a store of value, but store of identity and store of data and store of consent. So a token that can be delivered by party A to party B with the intent of transferring value, and value here is defined as permission to look at my data, permission to bill me, permission, the ability to redeem this token for money from my account or from the insurance company's account or from my wallet for that matter. So these are really fundamental shifts, okay? The last thing I'll say is doing this for healthcare will also open up every other sector in the world. What we are describing here is what a real human-centric experience looks like between parties. And if there is one criticism of crypto that can be made today, it's not human-centric, it's protocol-centric. And protocols are critical, but human centricity is what healthcare is demanding. And that's where I think the evolution of crypto, I think, has reached a point where human centricity can be achieved. You have companies like Coinbase offering more user-friendly wallets. You have the emergence of transactional capability in crypto that is grandmother-friendly, be it scanning a QR code to open a restaurant in a menu or to transfer Bitcoin. So those we're achieving slowly, very painfully, but slowly, we're getting to a point where grandmother can use some functional capabilities of what we all know as crypto blockchain industry. We just need to take a few more steps, which is what SolveCare is trying to do, to deliver a user experience that brings it home from a clinical healthcare perspective. So this is truly a moment in time where we're going to look back and say, There was a world before and there's a world after. Post-COVID world is very different than pre-COVID world. In the post-COVID world, if crypto doesn't adapt, well, it will adapt because we are working at it, many other companies are working at it, but this is a time when you have to leverage and bring forth the enormous change that everybody dreams about when they get involved in crypto. But healthcare is ripe and ready, and the technology is almost caught up, so we can now achieve that inflection point.
Yeah, appreciate that insight, Pradeep. And definitely, as you said, rightfully, it's, you know, that when the rubber hits the road, it's all about efficiency. So I appreciate that perspective. Your comments, Pradeep, bring me to one of my next questions, and that is kind of in the context of crypto within the context of efficiency and how it can be used. So this question is more specifically towards Pradeep and Jason's experience, but Dr. Randall, if you have any comments from your insight as well, please feel free to share. But my next question is, how can crypto be utilized in terms of creating efficiency when we look at things like purchases? So purchases of medical devices, purchases of services, prescriptions. If you could, Pradeep, if you could start off maybe first by sharing some of your insights on that, and then I'll turn to Jason and then Dr. Randall if he has any comments.
Well, I have very specific use cases in mind for healthcare that are imminent and relevant, I think, to grandma again as our avatar, as the person we are really trying to serve here, or grandkids, but certainly grandmas defines the need for care and access. So first is devices. Let's just take that. We can all go buy a blood pressure monitor in the pharmacy, right? Okay, why would you need crypto for that? You don't. You can buy a blood pressure device and, you know, take your measurement and then call in the doc and tell to the doctor's office, this is where I am right now. But it's a very inefficient process, which is why most blood pressure devices bought sit on the shelf. Patients with heart disease and diabetes don't take their readings and report them. Even if they take the reading, they don't get reported to the doctor. And the doctor, when they get them, can be certain that those readings are accurate or even useful. Now, one ugly truth about healthcare data, everybody talks about electronic medical records and data storage. Here's the ugly truth. Shelf life of healthcare data is not more than 90 days. Data loses half its value every 90 days. By the time it's a year old, it's practically has, you know, 1/8 the value it had when it was taken. Because aging healthcare data has limited significance, and no doctor is going to use old data to make new diagnoses. Simply not done. Clinically unsound practice to look at 1-year-old blood pressure reading from Ahmed and decide that you need a certain medication. Who would you agree to that, doctor? You won't. You would say, take my new reading. And not only take my reading now, take a reading 3 days in a row to make sure that you're not dealing with a spike. So healthcare data has a short shelf life. So data has to be contextual, relevant, and timely. Now, where can crypto help with this? The same device attached to my digital identity, to my token, that device tokenized, reading the data would automatically ascribe that data to me, would link it to my medical ledger, and will be able to be seen by the doctor who has the right to that token and nothing else, or the nurse, safely and securely, and either real time or near real time. So what crypto enables here is not that you can buy the device with Bitcoin, so that somehow change your health quality. No, it didn't. But if you link that device to your identity in your wallet, the identity of your wallet is shared with the identity of the doctor's wallet, and those identities are linked from a transactional perspective where Pradeep's data is visible to that identity on the B side. So A can talk to B without needing any further paperwork or consent. And B can be sure that the data came from A and nowhere else and wasn't tampered with, straight from the device to the doctor. What's the value of that data now? It's 100 times higher. And if the doctor gets sued for that data-based decision, he can say, but look, I got this from Pradeep's digital wallet, secured and encrypted to my wallet. If he put wrong data in, I'm relying upon and with the consent of the patient to treat him based on the information he's supplying me, which is coming from a device that's already attributed to his token. So I have a chain of custody, okay? So in that regard, the device is the same, the data collection process is largely the same, but the attribution of the data to the patient, the consent to use the data, and the ability to see the data in real time changes the value by 1000x, okay? So this is where crypto becomes important. It's not in the aggregation of all your medical records into some big blockchain and hope that it never gets hacked. It's about connecting people under a transactional consent that they have given to each other, and immutability of that private relationship against a public smart contract. So in a nutshell, you can dramatically improve the value of that same $35 device before crypto, when you link that to enable tokenized data exchange of that same device between secure relationship given by proper consent that will stand up in court. That's the value. This is just one example. Another example would be prescriptions, right? I send a prescription to Pradeep. I'm a doctor. I send a prescription to the patient. The prescription is tokenized. It has all the appropriate conditions of how they should be filled. Let's say this prescription is for some kind of a drug that shouldn't be over dispensed. I shouldn't be able to go to 3 pharmacies and fill the same prescription 3 times. So that token would inevitably enforce proper filling. That token could also be automatically used for that prescription when filled to be immediately redeemable against an insurance company's wallet or Pradeep's wallet or some combination. And it would also allow that token to be shared with family members so they know exactly how grandma needs to take her prescriptions, when the refills are due. You know, we are building all these centralized standalone prescription databases. There's, e-prescription is a big deal for the last 20 years in the US. Problem is each e-prescription database is separate. Everybody, you're on one ERX, you're on one ERX. You got to hook every pharmacy to that ERX for it to accept your prescription. Why are we doing that? The reason, because we are doing that, CVS could buy one of the largest insurance companies in the United States, because we have created all these insular chains of supply, which are highly leveraged and controlled by very few people. I need to be able to shop for my prescription without being bound to a very tight network. So I could put my prescription token on a chain and say which pharmacy in the world wants to fill it. And why couldn't a pharmacy in South Africa fill it? If they are certified and they have the ability to dispense the same drug, what's the difference? So we could break open healthcare. Of course, organizations where I used to be executive, are going to go through a major rethink, as Jason said correctly. This is going to create a different paradigm and will shake up a $8 trillion a year industry, and a lot of people will resist it, but it's good for the humanity, it's good for people, it's good for the patient, and out of their own economic interest, they'll adopt crypto. So it's a top-down, bottom-up question. If we deliver value to the patient, it's a bottom-up adoption. If we deliver value to the institution, it's a top-down adoption, and there is room for both.
Makes sense, Pradeep. And I think, that your comments on looking at it from a physician's perspective as well is very unique, because once a physician can actually identify with immutability and 100% confirmation that, look, this information was sent at time X or time Y, it gives them that sense of comfort and confidence with respect to a trail of information that is immutable. So thank you for commenting on that. Jason, if you could kindly share some of your insights on this as well, please.
Yeah, so what Pradeep is talking about is, when the patient gets this device or when the patient gets their prescription, which is very important, but you can also look at it at the pre assignment or the pre-prescription, if that's even a word. But you can look at where are these drugs coming from. We can trace them all the way back to the source and, log these immutable records on the blockchain that are transparent. So the patient knows that, if I'm going to put a heart monitor or something into my body, it's a piece of, I want to make sure that is the absolute right equipment. I'm going to take a prescription drug. I want to make sure that that is the right drug, that it is not stopped anywhere else along the way, all of these things. And, when we talk also about regulation, if you are, creating these records on the blockchain, whether it's public or private, I do feel in a sense, it becomes easier to regulate because it's all there. It's all available. It's transparent. That's, the good part about what we all love about this technology is the transparency. So when you talk about these things and how it could line up and increase efficiency, it exceeds to the regulation part as well, in my opinion.
David, you know a lot about regulation. Apologies, Emma, that I didn't mean to moderate here, but I know that Dr. Randall spends a lot of his time in regulation. I would be very curious when the time permits for you to hear that comment.
No, I think to tie everything that you've stated together would be to look at this from the lens of what's currently occurring. And some of the research that I published specifically in the Medicaid space about fraud, waste, and abuse. As Pradeep well knows, and Jason, I think you probably intuitively know, there is massive fraud, documented fraud, within public health systems and even in commercial insurers that they spend a lot of money, time, and effort to combat. Some of the claims data that I've analyzed with both published and some non-published research, it's close to 25% in state Medicaid systems. Why is that so? Because of all the issues that Pardeep just laid out. Specifically, these data systems that occur in public health programs they're siloed. So A doesn't know what B's doing because there are a lot of different programs, services that are offered, and they are very distinct in terms of their implementation. So providers, crafty providers know this and they take advantage of the system. So you give the example of, say, some heart monitoring device. Well, if a provider is so inclined, they could bill for 10 of them instead of 1, or 100 visits instead of 3, as an example. And most state Medicaid systems really don't have the capabilities to detect that type of fraud. And usually when they do detect it, it's the direct result of some employee in that provider office calling a hotline saying the provider is doing something they ought not be doing. Blockchain eliminates that to a degree in terms of providing transparency to eliminate the ability of providers to engage in that type of activity. So you get this, what I would call a shadow effect, meaning if they know that they're probably going to get caught because of new technology or new applications, they're probably not going to do it. So that, I think, is a direct, tangible result of deploying a ledger with programmable attributes that eliminates the opportunity for providers to engage in fraud, waste, and abuse practices.
Yeah, I appreciate that, Dr. Randall, and your comments are so on point with where I was going next. So they really kind of set the foundation for my next question before we head into closing remarks, of course. And maybe Dr. Randall, I'll start with you to answer this question if you don't mind. And looking at the way that healthcare has been for so long, of course, one of the often pushbacks we get is, well, when we look at efficiency or areas such as the examples you had mentioned, how does, involving crypto and healthcare really push back or augment or accelerate or overcome, the way that it currently is with the current system? What are the efficiencies? What would you say to someone who came to you and said, well, if you were to give me one, pointed example or one summarized statement, why is it more efficient to involve crypto versus the way things are currently done at the status quo?
I'll go back to the example I gave earlier with non-emergency medical transport. Incredibly inefficient system that's been, again, documented both by the GAO plus, again, an article that I had published a couple of years ago looking at this space, that having a transparent, immutable record would allow for the elimination of many of the inefficiencies in terms of transporters who are part of the program, of billing for multiple rides that don't take place. It occurs, it's continuing to occur by having a smart contract with different applications. You could eliminate that temptation that will always exist in public programs such as Medicaid and Medicare. So that, I think, is a very good example of driving efficiency in a specific programmatic aspect of a public health program. We could spend hours. I could dissect probably several dozen more programmatic aspects of both Medicaid and Medicare where you could apply technology. Pardeep has mentioned a few, most notably in adjudication, where that process is generally inefficient, where you could deploy smart contracts on a blockchain in conjunction with a tokenized crypto to make certain that you drive out the inefficiencies within the systems and make certain that you've got true prompt payment and transparency in the billing and payment process.
Well noted. Thank you for that, Dr. Randall. And Pradeep, I wanted to pivot the same question to you, but just add an additional layer onto that question, if you don't mind. And then Jason, will get to you as well. When we look at that and look at the status quo in terms of what we face right now, given the fact that regulatory bodies, of course, are the gatekeepers for introduction of things like crypto into healthcare, Pradeep, when can you also see, or when do you forecast, or any thoughts on when the regulatory bodies will start having this in terms of a mass adoption as well with the involvement of crypto?
Okay, so use cases I'll give you where there is a definitive value is an insurance view. 90% of the bills that you get from the doctor, you don't need to look at. They don't need to be looked at because they are basically a fixed rate payment. So the rate table between the insurance company and the doctor already is signed and fixed. And all the doctor needs to do is to submit the bill. And all I have to do as an insurance executive is to ensure that I can verify the identity of the patient to be one of my insured members, and I'll pay the bill. So 90% of the claims, as they are called, or medical bills, I would rather not receive at all. Because each time a bill is sent from the point it's received in the mailroom or electronically to the time it's processed, it runs through my systems, it costs $1, between 25 cents and $2.50 just to look at the bill and to run it through. And when you get billions of bills a year, it's a lot of money. Quarter, 250 million, $1 billion goes just like that. So if you simply, the reason I have to look at the bill is to verify the identity of the doctor, identity of the patient, the date of the day the service was delivered, was the policy valid that day, and really the code on which the patient was served. Meaning it was just a regular visit. Pradeep came by to do a maintenance checkup, whatever. That's it. But the process is so cumbersome that the doctor spends probably 10% of their billing rate to bill me. If they're going to bill me $100, they typically pay a billing agency $2, $3 to create that bill in a proper way. And then the bill goes to the insurance company. That spends $2, $3 to look at the bill. And in the end, the doctor gets paid at $47, but we spend $13 to pay $47. How crazy is that, right? So now let's just simplify it. Let's have the insurance company issue me a digital token that can be tampered with. That token is Pradeep's identity, sits in Pradeep's Care wallet. I can send it to any doctor I like. That doctor, when they receive that token, is my identity is linked to that wallet. So therefore, they can see it's me. They can see the token came from my wallet. So everything is automatically proven. The doctor can then redeem the token in real time without sending any bill, by simply entering a 5-digit number, which is called a procedure code, 5-digit number. So like scanning a QR code, they could enter a 5-digit number on their wallet and say, when Pradeep came in, I entered 90210, not the right procedure code. Of course, we know that it stands for something else, but this is what I built. This is what I did. Patient's identity, doctor's identity, and the code are automatically digitized. The code is in the wallet. Instantly, the token would convert into a price of the rate table by interacting with the smart contract, and boom, the doctor gets paid the $47. The insurance company didn't spend a dime, not 1 cent, to receive this bill and pay this bill, not 1 cent. The doctor didn't spend $10 to bill 47 and didn't wait 90 days to do it, and the patient got immediate and accurate service because their identity was verified through the token. This alone, this little use case of a insurance company issued care card in our world, in SolveCare's world, shared with the doctor's wallet, the doctor opening the care card, entering a 5-digit number and instantly getting paid would save the United States billions of dollars a year in useless, wasteful activity, and will improve the relationship between patient, doctor, and payer. This application that I've described to you, you could build on a SolveCare platform in a week. In a week. And I'm giving you 5 days of free time, so you could actually do it in 2 days. But I'm saying take a week and build this, and you would save billions, and it would drive crypto adoption in healthcare through the roof. You would have billions of dollars a day being transacted on this little app. But the reason this app can work is because you need to have all the underlying platform in place: consent, security, automatic smart contract authoring, the wallet, the cards. That's what we have done. But I don't want, it's not really about SolveCare. I'm simply giving you a use case that you could do this. You could literally do this over the course of the next, since insurance companies in my old dominion, we need to go through a lot of, double testing and triple testing. Fine, I'll give you 3 months. But 90% of your EDI claims and paper claims would disappear. You would not need the massive basement where you receive truckloads of paper claims. And believe me, they still come. And your EDI gateways that are hard to maintain would simply not need to exist. You don't need to generate an ERA. You don't need an 837, update. I mean, all of this thing that we do, insanity that we fund billions of dollars in IT costs, gone. You could do it in 90 days. So the point is, the technology has caught up to where these inflections will come. Now, 3 years ago, you couldn't do this easily, what I've just described. Even SolveCare couldn't pull this off in less than a year or two. Now, when an insurance company comes to us, we can do exactly what I described to you in under 3 months, given all the processes that you have to follow to launch a new digital health solution. Within 2 to 3 years, even if you get 50% of your docs to adopt the model, you would crush your current IT budget by saying, look, I have more money now than I ever had before to invest in innovation. So that's just a use case, guys. And this is only a US use case, but the same use case applies in China as well. Some alterations, but you could do a China-specific use case in about 3 months. And the speed at which Chinese work, you could do it probably in 3 weeks. The point is, these are real tangible value to insurance, to doctor, to patient, to regulator. Now, why does the regulator care? Let's come to that point. Well, the regulator cares about getting the doctor paid in real time. The regulator very much wants to see that the doctor is paid accurately and timely, and there are no unnecessary delays. And the insurance company is not trying to float the money on doctor's expense and earn interest, which of course nobody can earn any interest right now. But when you could earn interest, insurance companies like myself would delay the payment by extra 15 days to earn some float. Insurance company, the commissioner doesn't want you to do that. So the regulator would see the timeliness and accuracy of your payments. They would love you for it. The association would give you 5 stars. And your competition will be like, oh crap, I better do something because these guys are kicking my butt in the market in terms of provider relations. So self-preservation and self-growth and economic necessity will drive a lot of this thing. It's not good Samaritan. Patient centricity absolutely needs to happen because there's no other way for society to function. But just from an administrative perspective, cost reduction perspective, regulatory perspective, these kind of transparent transactional capability, where identity of the doctor and the patient need not be revealed at all for the contract to work properly, is pure magic. So I think that this is the time for crypto in healthcare is move from abstract to concrete. And I'm trying to give you a lot of concrete examples today to say to you, the time is, inflection point is arrived because the technology has converged to where we can do these things that I've described today in a matter of weeks now.
That makes sense. And I think, the fact that this just individual use case is really the tip of the iceberg is quite impressive. And also those numbers, no matter the regulatory body, nobody could look away from those numbers. Those numbers are just, phenomenally impressive in terms of the savings. Jason, if you could please provide some of your thoughts on this as well, please.
Yeah, so I'm probably not the expert as far as healthcare efficiency, but I just from listening obviously to Dr. Randall and Pradeep, there's obviously a lot of issues, and we've only discussed a handful here. And I think it's safe to say we don't even know what we don't know as far as like the list of issues that could possibly be solved. So I think I guess my only point would be I always like to transition and talk about when we first got the internet. And when we first got the internet, it was basically just ping and for communication, very slim communication. We did not know that we were going to have Amazon and AWS, distributed cloud computing, all these things. So we're just, what Pradeep is saying, we're just at this point where we can now start to build on this stuff. It's been folklore, it's been a myth for years and years. This is all coming and we're going to be able to build on these platforms. And now we can. So I think it's just a really exciting time to see what will transpire over these next year, 2, 5 years. Because this is the time, like Pradeep is saying, to get involved. If you're not getting involved right now, you're going to be very, very far behind and miss out on some things that are happening right now.
Well noted. Thank you for that. Yeah, absolutely. Definitely the time is ripe right now. As we get towards the close of our hour here, we're finishing up on our hour here. So before we conclude, I'd like to give each of our esteemed panelists a chance for some closing remarks. So Dr. Randall, the floor is yours if you'd like to provide some closing remarks.
Sure. So I'm going to circle back to the first question that was posed to all the panelists. Is crypto sexy enough for healthcare? I couched my remarks saying, no, not yet. And I stand by that. But I think that what we've outlined today, what I've discussed, what Pardeep and Jason have discussed as well, is that we're almost there. I think we're getting there. But as I stated, this is going to have to be an incremental process because of the nature of healthcare administrative and payment systems, especially in the public space. There are too numerous examples of pain points within these systems where blockchain and crypto applications could be used with specific processes that I think we've outlined today. I think that's where the promise of an immutable ledger and the efficiencies that crypto and specifically the blockchain can bring to increase transparency and efficiency within these systems to eliminate the documented waste, fraud, and abuse that is endemic to both public and private healthcare systems. So I think we're almost there in terms of getting into an adoption mode within a lot of these systems, but again, this will have to be incremental in terms of identifying inefficient processes and systems where this can be deployed. And I think it can, and I think if we have this conversation 5 years from now, or for that matter, even a few years from now, we're going to see examples of deployment.
Appreciate that, Dr. Randall. Jason, any closing remarks, any closing thoughts?
Yeah, totally agree with that. And I, as I've been working with Solvecare and following you guys for a while now, that's how they're doing it. Like I think when I first met you guys, it was a website. You could go and read about it. And then we introduced the wallet and the cards and all those things. And now you can go to the marketplace. So look, you have to do these things in iterations. I totally agree with Dr. Randall in that part. And I think that's the way we're doing it. And look, I think it's also important to separate the technology from what we're seeing with the price of these coins. And I think people sometimes see a Bitcoin crash or Ethereum crash, and they think it's going away or things are not going how they should. But I assure you that has nothing to do with the technology. They are continuing to build this. It's getting more and more robust. And I think that is what you should pay attention to if you are wanting to be in this space, whether it's healthcare right now. What Pradeep said, I think is 100% true. Healthcare, if this is successful in healthcare, it will start to resonate and permeate through other industries as well. You could see it work very well in government, a lot of other things. So I like what you guys are doing, laying the blocks. I think it's super important. And just stay the course and keep iterating and getting better. And that's what Solvecare is continuing to do.
Appreciate that, Jason. Thank you for your comments. And Pradeep, I'll turn to you last for any closing remarks, any final thoughts on the topic matter.
Yeah, I think I'll take the cue from Jason. He's absolutely right. The price of a coin or a token is not in any way an indicator of the value of it. They are two different things. The value of what is being done with blockchain, with smart contracts, with decentralization, with the ability to manage consent and use. These are fundamental shifts, and we will go through that application is inevitable, and it's going to drive significant value. And it's difficult to speak not about Solvecare specifically because we are doing probably the most in healthcare today. But as Jason said, the introduction of the platform in its current iteration, the upcoming iterations, the Care Wallet's ability to now manage both health asset and digital asset, which is coming out, the Care Marketplace, a linking of the Care Marketplace device data to the Care Wallet automatically, and allow it to be in custody of the patient all the way to the hands of the doctor, which drives huge compliance and adoption, addresses a lot of compliance issues and drives adoption. The authorability of the care cards, which are in effect decentralized apps that are linked to the chain and to the token. It brings all of these pieces need to come together for healthcare to adopt and use and see adoption by the consumer. And in my mind, we are probably the most evolved, most exciting convergence of the demand from digital health, the demand from regulatory risk and patient engagement, the demand from society for decentralization and no one entity owning and controlling their healthcare identity, because that is an incredibly scary thought. And then you end up with the value of self-service and digital health that we've all gotten used to in the post-COVID world. I mean, it's the perfect storm. And to sort of end on a self-care note, all these pieces have taken painstakingly half a decade to heavy investment and effort. But now as all these pieces come together, it's that inflection point where we start to see real adoption by really big healthcare cohorts, be it insurance companies, be it hospital systems, be it large group of patients with a certain disease condition, be it citizens of a city. And we are seeing that. We are seeing adoption conversations happening with the citywide system launches on Solvecare platform, where an entire city would, and with a large metropolitan in the US, would use the platform to drive better health and wellness and benefits. So I think clearly the society, the technology, and the organization and the community are all ready. So but it takes a while for all these pieces to come together. So has the movement for crypto in healthcare arrived? Yes, I do agree with David, Dr. Randall, that there is a lot more adoption ahead of us. There is many things that still need to be done for this to become ubiquitous, where every element of healthcare will run on crypto is 2, 3, 5 years away, but huge amounts of value exists today. You don't need to sell everything on Amazon to be successful, but then once you became successful, you could sell everything on Amazon. The idea is to be very successful and then keep growing, because the healthcare market is vast. I mean, 9,000 billion is a number that defies comprehension by any human being. It's just unbelievable. It's basically the wealth of the entire, most of the world's wealth compresses into that number, smaller than that. So it's a massive number to be spending each year. And it's a number that we cannot fathom. And all we do is to get a dozen or so major use cases in play, and you will have enormous adoption. But yes, I would agree with David that a lot more adoption can be driven over time. And I think ultimately, I see a day not too long in the future, be it 5 years, be it 10 years, but not longer than that, where all of us will administer our healthcare through a crypto wallet in our hands that converges our medical benefit and financial assets in one place. That is inevitable. That's coming, and very few can deny that. That's just going to happen.
Appreciate that, Pradeep. And I think you rightfully said that, the fact that this will be ubiquitous in the near future is very palpable. So yeah, without question, it is very noticeable, and I appreciate your thoughts on this. That does bring us to the end of our hour here. So in summary, I would, of course, like to thank Coindar again, as well as Synopsis, for their time, for their invitation, for having us here. And it's been an absolute sincere pleasure to have each of our panelists here. I know they're all tremendously busy, so we sincerely value each of your time, and thank you for joining us here today. It's been an absolute pleasure.
Thank you.
Thank you, Ahmed.
Thank you.
Thank you, Dr. Randall. Thank you, Jason.
Thank you.
Take care,
Thank
everyone.
you, Jason. Bye.
I want to appreciate our colleagues to find the time to joining us and participate in such an interesting panel discussion. And you guys touched like a really not sensitive but kind of interesting issues that require increased attention. So introducing our next speaker is Karnika Yashwant, founder at Forward Protocol. And the topic of the speech is Gateway for Mass Blockchain Adoption, Forward.
Hey, thank you, Maksim, for your amazing introduction. I'm super thrilled to be here right now and very excited to be presenting with the Synopsis team here. So we are at a beautiful time in the blockchain world right now, where the opportunity of what's happening as a technology is expanding by the day. At the same time, the gap between the entities who can use it, people who can deploy using this amazing technology is widening. Because on one side, the technology is moving super fast and the understanding of what is happening here is becoming harder and harder by the day for common folks. But the biggest opportunity in the blockchain space lies where a user who has an idea can get to reality in a very short amount of time. They can move from that ideation phase to execution in the least cost and the least time. So this is something that you can see in the traditional Web 2 space when the whole internet era started out, when businesses were trying to come up with their websites and web applications. It took them a long time and there are a lot of fundraising happening around it. But over a period of time, one thing that happened quite significantly is no code interfaces. There were products developed which made it easy, which made it possible for anybody with an idea to bring it to life without having to raise funds, without having to hire loads of developers and running a tech company out there. The technology existed and it grew, but it also simplified as an interface for someone who was trying to start out. When that happens, there is a big shift that's happening in the adoption. And that adoption by itself will bring more and more businesses and people driving the trend, moving upwards. The biggest challenge we faced in the blockchain ecosystem right now is that the inflated prices, inflation of everything going up, but then there is not enough value that's substantiated. And that is exactly where Forward comes into play. So Forward is an ecosystem which is helping adoption of blockchain happen. It's synonymous to the adoption phase, because coming from our experiences and background, I've been in the space since 2013, and we have been looking at every trend, every rise and every fall. And at each of the phases, there was something significantly changing. In the early days, it was something as simple as a wallet. And at a later point, it was something like an exchange where people can buy. And right now, it's a place where people can use. And if this phase were to successfully pass and for us to get to a point of more and more utility and audience, simplicity is the key. So Forward's vision is to bring and somehow, and through the process of onboarding businesses of different niches, different audiences, to bring in 1 billion users to the world of blockchain. But how do you do that? The only way you can accomplish something of that scale is if you not only make the process easy for these businesses to use, but also for their end users. If you want someone from, let's say, in the entertainment space or sports sector to learn how to use MetaMask, to learn how they could use a particular wallet, and for them to understand blockchain, they might be young or old, they might be educated or uneducated, they might have different challenges. And if we force them to learn the ways of the blockchain, we are going to limit ourselves so much from so much audience. I mean, there are people who are just learning to use mobiles and computers, and they know the basics of it. They check their emails and whatnot. If this technology cannot integrate itself so close to it, so deep with it in a so native format, it is going to take much longer time for people to use. And that is not a time that the blockchain has. Blockchain as an industry has been already there for more than a decade. And it is about time to bring that simplicity to make the difference. What I'm going to show you is the model through which we solve it. And once we get to the point of bringing this difference and the utility to the chain, we are changing the way people perceive it and the way people use it. So to get started, Forward is helping people come up with that instant decentralization within their businesses. Let's remember one thing: the businesses who will be adopting blockchain, they are not here to reinvent a new technology. They're not here to create their own blockchain. They're not here to create their own DeFi structures. They're here to use what is already created. They're here to use the existing technology to bring their business processes, their users, and their utility to the chain to take the benefit of what blockchain has to offer to them. But they're not here to reinvent the wheel. That is not their business, and they have not raised funds for that. So with us, with Forward, we have that entire ecosystem where someone can connect. They can connect to any party in the world of blockchain, whether be it a layer 1, layer 2, or it's a protocol, it's DeFi, it's an Oracle, it's some form of infrastructure provider. They can connect to everyone from one place, and that's Forward. The best analogy, the best example that you can wrap your mind around is a hybrid of GoDaddy and WordPress. Imagine if someone is able to just create a space, a hosting space, in one click, deploy their WordPress, and in few clicks, bring the theme plugins and get their website up and running. The same thing in the world of blockchain is what Forward is. You can create your infrastructure on the blockchain. You can connect to all the applications. You can have templates of front end and back end that you can pull around and bring your application to life with a zero code. You don't have to code. You don't need to know technology. You don't need to hire developers, and you don't have to raise any funds for it. If you have an idea, that's the investment that you need with Forward to get onto Web3. So thinking about the overall blockchain as an ecosystem, you have these so many elements: DeFi, NFTs, AI, and all that. And if all of those can be simplified, simplification is a key. That is Forward. And this is a massive bridging. There's a huge gap between the Web 2 and Web 3 space. And the opportunity there is a multi-trillion-dollar opportunity that we are bridging and bringing forward, which is shared with everyone out there. It's not something that we do it for ourselves. It's not something that we create as opportunity for us as a business, but as an ecosystem, we share this because every entity that is involved here, they are reducing, let's say if it's a business owner, they're reducing the cost that they're putting in. They don't have to spend the money to create something. And on the other hand, developers, they are able to access a wider audience. Instead of them developing a product for one customer, now they can develop it for hundreds and thousands of people to use by putting it out there as a template. And they make recurring revenue. End of the day, revenue is the key. If a business can have consistent revenue to keep them afloat, they're going to be successful no matter what happens out in the rest of the market. And that is what is being provisioned here for the tech developers to come up and have that revenue model, for businesses to use that model to grow. And as you see, it's easy to use, it's open source, it's free, it's something that where there's a flexibility, a democratic way for everyone to compete on a fair playing field, and for them to set their own fees and way they need to monetize and make the best out of this. So when you have that democratic decentralized philosophy at the core of what one is doing, that changes how a platform is perceived. At this point in time with Forward, it's not about what we do. It is the opportunity for what the members in the ecosystem are and what they want to do and how they want to take their business forward. So here is the high-level overview of what the Forward ecosystem looks like. It is a layer 0 extension. You have Cosmos, and if people want to deploy a subnet or a blockchain out of Cosmos, it's an incredibly challenging thing. They need to have a lot of developers assistance for months to be able to do that. With Forward, they're able to deploy their subnet, which is like a holding place where the blockchains are, and they can deploy their blockchain on top of it and run it in a matter of minutes. And on top of it, if they don't want to use their own blockchain, they can connect to some of the cluster blockchains provided at the Forward side. Again, this comes from the concept that There's no one specific blockchain which serves the purpose for everything and everyone, because let's say that your application has to use a lot of fast processing data. You could go ahead and use something like Solana because it's fast. But then the challenge is maybe you have a lot of cash, you have a lot of fund moving around, and you want to have the protection of decentralization of Ethereum. It becomes a challenge. You don't have one blockchain which has that super decentralized nature and something that has the speed that you need, maybe something that is private or public, and all this complexes that comes in, which is, there's no one blockchain that can satisfy all. It's impossible, because there's always an balance between decentralization, the security, the speed, and every one of those elements. So we are introducing the cluster chain approach. It's a time of the technology where an entity might be using multiple blockchains to work, where they might have something fast processing on a high speed, a low decentralized layer, and something that needs DeFi on a low speed and high decentralization part. Whereas they might always store something purely for a storage. They might use some value ledger where they're storing some data in the long run. So a single architecture having these multiple chains enables an application or a business to function in a robust way, to cut the cost, but to also benefit from the advantages that blockchain poses for them. So with this layer one options that Forward provides, an entity can choose what they want to do. But if they want to customize something even further and they don't want this tool sets provided, they can go and deploy their own and copy a version of this and run from their subnet, which is enabling them to get to the market with the choices that they want to do. What if they don't want to have fees at all? If they run their own subnet and become their own validators, they don't have anyone to pay the fees for, and they can change the entire infrastructure to be private. What if it's an corporate who wants to run it as a private blockchain between maybe 2 or 3 companies? What if they want to form a group of 5 or 6 companies in an industry who wants to set a new standard and they want to collaborate? What if they want to be the only validators? There are numerous possibilities and numerous options that can only happen in an open ecosystem like this, at the same time without the cost of developers and the time and effort it takes to deploy something on their own. So this enables that entire flow for them in a no-code interface. And on top of all of this is the Forward protocol itself. It is a place where they are able to deploy their applications and they are able to use those applications for their day-to-day users. So here's a framework. I know the framework appears a bit complex, but I'll break it down in easier terms. On the left, you have all these different developers. So these are the developers who are developing various blockchain templates or dApp templates. It could be a front end and a back end of any form of dApp. Let's say you are trying to create an app like a Uniswap. So now you're the front end of Uniswap, you're the back end. If you're able to take that, customize your terms and deploy your own DEX without the cost, or if you want to have your own employee incentivization program, or maybe you want to tokenize some asset, maybe you want to create a reward program for your customers like a loyalty solution. There are hundreds and thousands of ways you can use a blockchain. If there is one template that can fit all, it doesn't exist. There are going to be thousands and thousands of templates, each for different industry, for different sub-uses within the space, different ways something is handled. And these developers who are in the community, they have an idea and they bring that idea as a template, which in the factory, someone is able to customize and they're able to modify what it is. It's again, they can modify it at a blockchain level, a subnet level, or they can just say, okay, I don't want to do all the blockchain for myself. I just want to take an application and I'm going to use Polygon for it, Scale for it, or KuCoin community chain for it, Ethereum for it, Near protocol, whether it's a Rust-based blockchain or if it is a Solidity-based, they're able to choose and deploy where they want to do it with that ease and comfort. Although this appears complex, the objective that we're trying to really get to is for an end user, what you see here. Choose an application, choose a smart contract, choose a blockchain, go live. Whether it's your own blockchain, whether it's some existing blockchain, and whether that template is something that completely resonates with you, you're going to customize on the interface, that's all left to the flow. But end goal, in 5 or 10 minutes, can you get live? And if you can deploy and be live in that period, that is a success for Forward. And that is what we have been enabling for a lot of users. So while I can go in deeper on this, I don't want to jump too much onto the technical aspects, but what I would really drive here is that Forward as an ecosystem has been there long-standing with millions and millions of members in the partner communities and a very large audience for ourselves. And we have been featured, spoken about in quite a lot of places. And we have a very beautiful support community and partners, as you see, and an amazing team as well. Our one of partner ecosystems is one of the largest out there because we are able to bring about the interest from a wide variety of people in the space. Because at the end of the day, if we are trying to create something ourselves, we are limited. We are not going to grow as fast as we would like. But if we can bring everyone together, join hands with everyone, we are making an impact that has never been seen before. The heart of blockchain, the heart of decentralization, it's about community. And community is not about just the Twitter, Telegram followers. It is about the people who will be deploying on Forward, people who will be developing, the developers, people who are businesses who will be using it, and the users of those businesses who will be interacting with the protocol. It also includes the investor community, obviously, like any other business, but then the focus has to be on the end user. The vision cannot be on the short term right now, what makes sense, but what makes sense years down the line. And Forward has always been thinking along those lines, structuring not only the entire platform, but every element of it focused on the end user's objective. And that is simplicity, idea to reality in no time. And that's Forward protocol. So I'm super excited to be part of this blockchain revolution and to be at the point in time when the whole world understands what blockchain is. Everyone right now knows that there is something called Bitcoin. There is a cryptocurrency revolution. There is blockchain as a technology to the extent of involvement every member in the world has, but they heard the name. And there are businesses spending millions and even billions of dollars allocated, large brands, towards coming up with the better ways for their brand to work and move to the blockchain space. With all of that traction happening, the missing gap is Forward. The missing gap is simplicity, and the missing gap is bringing all the right parties in one place and enabling that smoother flow from idea to reality. And I'm super pumped to be at the forefront of this revolution with every one of you as well, who will be contributing to this ecosystem in one way or other. So let's focus on the future of blockchain with the value-driven approach, building real businesses, building something that we all can be proud about. Definitely not something that is built only for making some instant cash like most projects have been in the recent years, which caused the harm, but building real value from the traditional space, things that make revenue, things that have an audience, that has a buyer, that has a value that people not only perceive, but they use and buy. And more businesses coming on chain is our major goal, our major objective, bringing true on-chain value. So with all your support, with everything that we would be as a community doing in the upcoming years, I'm super pumped we'll get there sooner or later. And very excited to be here. Thank you so much once again. Thank you to the team at Synopsis for organizing this amazing event, bringing all the talents from the world, and your great support. So looking forward to speaking with you guys face-to-face sometime soon as well. Thank you.
Imagine a lake with clear water and unpolluted air. Imagine a website with real news and no hidden, unlabeled, sponsored articles masquerading as real news. That place exists, and it's called Be in Crypto, the first and only cryptocurrency news portal to provide complete transparency and honest news. Pure, relevant, informative. Are you in?
Welcome to the Theta Network. Earn T-Fuel crypto rewards simply by watching live streams and videos. As you watch and share with others, you're contributing to the decentralized Theta Network, all powered by Theta's native blockchain. Discover the future of video delivery at thetanetwork.org.
The next speaker is Oleg Ivanov, co-founder at VZ.io and Berezka.dao, CB Capital, with the topic of the speech, why is crypto more than trading Bitcoin? Take the floor, Oleg.
Hi everyone, my name is Oleg Ivanov, and I'm here today to talk about why crypto is actually more than just trading Bitcoin. And today we'll try to uncover a bit of what current trends and maybe some future trends in blockchain ecosystem that are related to NFT, Metaverse, identity, intellectual property, and more and more. So before we dive into this, a quick intro on myself. So myself, like I said, my name is Oleg Ivanov. I am a co-founder of a Cayman-based venture fund with over 70 early-stage investments in various blockchain infrastructure projects in Asia, USA, UK, Europe, and Middle East mostly. We also run a sizable community of over 150,000 subscribers in Russian-speaking countries, Russia, Ukraine, Belarus, Kazakhstan, and many more. Running regular conferences, meetups, demo days, and hackathons. And since mid-2019, we also run a DeFi asset management division under the brand name of Berezka.dao. Some of you might probably heard of it. And through this, we have actually built a surprisingly unmatchable DAO tooling solution for asset management. So in simple words, we're helping people to deploy DAOs, to build their DAOs for their specific business cases. And today, let's just, since I was invited to say a couple of words about the current and future trends in the industry, let's try to dive into this. So in most cases, if some of you are here just making the first steps, or maybe you're in the field and you're talking to some newbies, you probably come across a very specific series of thoughts that you come to notice when you speak to people outside of the industry. So in most cases, when you speak about blockchain, people have this very specific connection when they say that, okay, blockchain is about cryptocurrency, cryptocurrency is Bitcoin, Bitcoin goes up and down in prices, and so it is only for traders. This whole industry is just for traders and speculators. It's not for me. And most people actually stop looking deeper because the technology, they don't understand the technology. They look into this just as a method to speculate and possibly make some money, or most likely lose it. At the same time, if we just sort of forget about this idea and take a step back a little bit to look from the distance on this whole industry, there's something very interesting that surfaces and becomes very visible. Let me tell you one thing. So a few months ago, I was reading a book by a very famous writer who's called Václav Smil, and the book is called How the World Really Works, where he gives a lot of astonishing scientific facts about energy, food, and other essential elements of our lives. And so there was one example which still I cannot get away from my head, basically. And what he says is that the amount of useful energy produced and used by each one of us right now at this very moment averages about 60 man-hour. This means that literally each one of them, in old school wording, owns the 60 people that are working for us, for each one of us, 365 days a year with no sleep. And these people, what are they doing literally right now? They are growing, delivering, storing, cooking, and serving food to us, right? They're building and maintaining our houses. They transport us around the world. They collect, repackage, and feed us information that we want to consume. They send our messages around the globe, and they're doing all of those things that we're used to. And again, like I said, so this, just imagine this. So in old sort of school, old time sort of measurements, each one of them actually owns 60 slaves in a way, on average, that are doing all these jobs for us to make our life more and more comfortable. So if you think of it, that becomes a very visual, like very understandable visualization of what technology and innovation actually brings to our life. It definitely raises the level of our security and comfort, and which otherwise could have been done only with additional manpower or with additional manual work, done to make sure that we receive this level of service and goods. So going back to our lives now, we definitely, at the moment, we're all used to let's say like unprecedented amount of comfort from numerous services and infrastructures, right? I mean, even during such severe times as COVID over the last 2 years, which literally shut down the whole world, right? It didn't kill us, it helped us to live. We spoke to one another. There was food at the table. The housing was fine, and so on and so forth. So imagine just all this technology helped us to survive over this adverse periods of times, which otherwise would have been different, apparently. So, and if we then try to sort of disassemble all these elements that we're used to at the moment, then to all these goods and services that we're surrounded with in our traditional life, in our everyday life, if we'll take a closer look at how this life is structured, so we definitely would notice that all our existence is based on access rights to a number of databases. So things like passports, bank accounts, driver's license, email, messenger, social media accounts, taxi, delivery applications, loyalty cards, local supermarkets, hair salons, educational diplomas, all of these things are basically is in essence just a simple recording in some databases that either gets us access to some goods and services or doesn't. That's literally it, right? And once we start understanding this, then the next stage would bring us closer to what blockchain is actually doing. And let's take a very simple example of money, because I guess this is the most sort of emotionally charged and most, in a way, quite important element of our life anyway. So the big question with all these databases, a quick sort of spoiler in a way, the big question here is who owns these databases, and let's try to sort of break it down in comparison of how traditional financial system works and what blockchain brings here as an innovation, not just the trading, speculation, and so on. So let's start with the banking and with money per se. What is money? Money is no longer bills and coins or things that we got used in material world, which we used to pay for goods and services, right? These are just some plastic things that are connecting us to actually some databases, right? Or some smartphones that are giving us this access to these databases where our accounts are settled. We understand that these databases are held by our bankers, right? And in most cases, these are just the numbers in those databases. And these databases are then synchronized with Federal Reserve or central banks of this or that country, and then later all sort of settled among various countries on the global scale. So these are just the numbers on the databases. Now, these databases are definitely stored by those companies and by the central banks, which means that these banks and these central banks technically can do whatever they want to do with these databases, which means, and which always happens every now and then in many countries, right? They can freeze your accounts, they can freeze the conversion of one currency to another, they can limit the withdrawals or deposits, they can not allow you to transfer your funds to specific countries or across the borders, or they can even employ some sanctions and to like specific country as a whole, because of the activities of like a tiny political group of this country. And with these activities, they would just hit and freeze all the assets of all the individuals within this country. So you understand that regardless the political and political reasoning or any other reasoning behind it, you just understand that there is a technical possibility for people to get access to this database and change it or implement some additional freezing rules and so on. That leaves you as a user of this database in a situation where you are not protected. You know that if you spend all your life doing everything you can, playing according to all the rules, paying all the taxes, being the true and loyal citizen of this or that state, at the end of the day, on one very specific occasion, you can be left with nothing, because again of sanctions, because of the situation of the political regime or whatever else, right? So the money's there, but you cannot touch it, you cannot withdraw it, you cannot convert it, you cannot use it, you cannot do anything. And then in many cases, they may even devaluate it or start some monetary reform. So it doesn't belong to you. So compared to this centralized system, which actually goes the same way, so the logic goes the same way with passports, with email accounts, with social media, and so on and so forth, because we're dealing just with databases, and the question who controls this database and who can influence this. So in parallel to this, if you look into blockchain, the whole idea of blockchain is literally limited to one database that is managed over thousands and thousands of servers across the globe, and this database is synchronized every few minutes across all these servers. So that means that every time there is a synchronization made on this database, it is synchronized over so many, like thousands of servers literally across the world, and there is literally no chance for people to change the rules there. And that's the whole idea behind blockchain. Now, what you can use, what you can do with these databases is definitely up for people to create in terms of the business models. And literally cryptocurrencies started with what many may compare it to your traditional remittance business. It's like your Western Union in a way. So Bitcoin is a version of Western Union, which allows you to transfer money across the globe very quickly. When you, like in Western Union, you come up to a window, you bring in your local currency, it is converted to some unit of measure within Western Union, then it is transferred to another country, and over there it is converted to your local currency over there. So the same goes with with Bitcoin. It's just that this measurement of this internal token, in our case Bitcoin, then is also limited in value, and in a way combines two essences of your Western Union business model, right? So it is a unit of measurement internally for the internal transactions, and at the same time it is in a way an equity of this company, which is going up and down in prices depending on the expectation from this business model. And this is practically it, right? So that's how it started. Eventually, when Ethereum came in and other blockchain protocols, there has been introduced an approach of so-called smart contracts, right? So where you could use a certain logic over this database so that this logic can be used for this or that business model. And some of those business models were related to simple banking products like deposits or withdrawals with lending protocols that are now a big part of DeFi ecosystem. So basically, yeah, this is just a copy of your lending and borrowing within a banking system. The second product is a swap or a decentralized exchange, again, another banking product where you would want to convert one currency to another. The same is done on smart contracts now within various decentralized exchanges or swaps and so on. And it is done again automatically because the code is done, is deployed, and it's very transparent and everybody can use it. And and more business models are coming over this. So where the whole industry is growing, it is using this idea that you get the access rights to this database, and this database can now be trusted because nobody can change it, because it is synchronized over thousands of miners, thousands of computers, or every few minutes, and now people cannot go back in time and change the rules and change your access rights that you've earned by doing this or that job. And more business models are definitely appearing in this industry. And if we look from now on into the future, then there's various verticals that most venture companies, venture funds, investors are very eagerly studying and heavily investing, because this is what people are looking in, and obviously hoping that in the nearest future, this would grow up and become useful on a mass scale. The easiest approach, of course, is to see whatever is being used right now on in traditional web ecosystem. Things that we got used to, like your e-commerce, like search engines, your emails, messengers, streaming services, and so on and so forth. So any vertical that you look at, all of them are being tested at the moment as business cases on blockchain. Now, of course, the technology itself, as it is very nascent and it's being developed and so on, it's very we shouldn't say that it is not mature enough, but the technology is catching up with the needs of the users that we all get used to. So the user experience has to be matching with a different backbone in terms of how the database is stored, to make sure that you get the same level of service, but with a completely different level of security and safety for you. And that's where the whole industry is changing. So in the coming few years, people are talking 10 to 15 years, there won't be any single online company without the blockchain infrastructure under the hood, because otherwise it would just make no sense for the users to use these old technologies that we're using at the moment. So, but then the current trends that we're looking at, of course, is the infrastructure layers. So basically, cross-chain solutions, bridges, wallets, DAO tools that allow to collectively manage assets across different chains through one window, and all the way down to the server levels. Because even as we move into the idea of metaverses, and our digital presence and digital footprint, apparently you have to understand the technical limitations of the current infrastructure, because in most cases these things are limited in the capacity for rendering, for example, and so on and so forth. So again, going down to the core details, you have stacks of technology and different layers where people are specializing. And right now, of course, it's not enough for people just to watch the tokens and see whoever launches a new token that potentially it might sort of go up in prices and so on. So if we talk about the hottest vertical, so it's infrastructure that allows to manage assets cross-chain and move them. So it's bridges, it's oracles, it's DAO tools, to name a few. Second thing is definitely the NFT as a technology, but not related only to art or music or so on, but mostly in the concept of uniqueness, which literally goes down to the idea of your ownership rights, right? So if this is a specific NFT that cannot be changed, minted, or so on, that means that I own it and I can prove that I own it. So with that, you come back to the idea of digital identity, digital rights to this or that business or service, and so on and so forth. And those technological solutions are quite interesting that everybody's looking at. The idea of digital identity, this vertical, without disclosing your personality, but making sure that you're not a bot, is also under a very is booming at the moment right now. And this is something that, again, most funds are looking at the moment. And yeah, so and the last but not the least, of course, is the intellectual properties. Where different approaches are used to manage so basically register, transfer, and litigate and enforce your ownership of this or that assets through the blockchain technology, with relation just to the digital environment or both digital and physical. So these are the verticals that most venture funds are now actively looking at. If you have any projects in these industries, find me in social media, Telegram, Twitter, Instagram, and send me projects. We're very interested in looking into these industries. This would be about it, I guess, and have a good day and enjoy the rest of the conference.
Friends, the second day of the summit has come to the end, and then 3 more amazing, exciting, and interesting days await you, providing a complete immersion in the digital economy and decentralized finance. Once again, I want to thank all the viewers and our amazing speakers for the participating. We have all done a great job for this summit to take place. The summit is hosted by the international blockchain consulting company Colibri Group and the leading cryptocurrency calendar market research service Coindar.org. I would like to take this opportunity to add that now you guys can follow all events of the crypto industry with Coindar in the new Opera crypto browser. Download, use, and enjoy the extremely convenient features implemented in the Opera crypto browser. The organizers of the Synopsis 5 are Being Crypto and Hello. Being Crypto is an unbiased blockchain media that follows the principles of the Trust Project, a non-profit consortium of media organizations building standards of transparency, accuracy, inclusion, and fairness. Hello is a sustainable and regulatory-friendly decentralized platform that solves the key issues of blockchain technologies through the maximizing speed, security, environmental friendliness, and scalability of the proof of ethic protocols. Consensus. I want to thank our general sponsor, Hello, as well as the diamond sponsor who made a significant contribution on the organization of this event. These are the largest companies in the crypto industry, such as Algorand, ARPAchain, Veracity, and Prisma NFT. Gold sponsors such as Envelope, Solve Protocol, Gaza Network, Bella Protocol, NewPay Technologies, Fairdesk, and Vera Esports also made a no less significant contribution. We express special gratitude to our dear friends and partners who also made a huge contribution to the implementation of this event. These companies are Teta Network, Teta Drop, and Teta TV, Blockchain, Binks, Sugarverse, Exmo, Exip, Musai, Holidays, and Mui Network. The official partner of broadcast is Teta TV, and on the Teta Drop platform, you can get several collections of exclusive NFTs dedicated to the summit and become their owners. The NFT data was developed by joint efforts of the Colibri Group, Teta Labs, and Coindar teams. We continue to use and develop one of the first Teta Pass implementations to access premium content for conference attendees via NFT. What does it mean? This means that every owner of NFT Synopsis can get a ticket of a special category, Teta Pass, to unlock the premium features of the ticket, as well as access to premium content and other options in the future. To do this, you need to have any NFT on Teta Drop released by Synopsis and log into the Synopsis website in the appropriate section called Tickets, Teta Pass. As part of the Synopsis events in an interactive zone has been opened, actually. Cryptocurrency projects hold contents and quizzes on the Coindar.org website in the Synergy section and on the Synopsis events website by itself. Be sure to come and participate, get some prizes. Thank you for your attention today, and see you tomorrow at the same time. It was Maksim Sukhonosik, the COO of Colibri Group and Coindar.org, and also one of the organizers of Synopsis. Thank you. Goodbye.
And I represent the Envelope project. Many things have already been invented in the blockchain today. Tokens, smart contracts, platforms for creating your own coins, NFTs, exchanges for buying, selling, and exchanging all these blockchain resources. Envelope is another step in the development of crypto technologies. The protocol that works with NFT and cryptocurrencies. The idea is simple but disruptive. Let's assume you have an NFT, Bitcoin and Ethereum. Using the Envelope protocol, you can wrap the original NFT accompanied with several tokens. Technically, you get a similar NFT, but what is the breakthrough here? Once wrapped, the token has a number of additional features that were not available before. The minimal cost appears. It is provided with coins wrapped together with NFT. An asset wrapped with Envelope has a number of properties that allow the original author to receive royalties from the resale of that asset. Various rules can be applied to the wrapped token. For example, a lock period for unwrapping. It secures the asset till the determined moment or safeguards it from speculation during the hype period. At the same time, wrapped tokens can be transferred and traded. These are just some of the scenarios for using Envelope. NFTs become more popular, and the tools provided by Envelope expand the opportunities of NFTs utilization. Envelope. Make your NFT valuable. Just practical, no hype.
Imagine a lake with clear water and unpolluted air. Imagine a website with real news and no hidden, unlabeled, sponsored articles masquerading as real news. That place exists, and it's called Be in Crypto, the first and only cryptocurrency news portal to provide complete transparency and honest news. Pure, relevant, informative. Are you in?
Welcome to the Theta Network. Earn T-Fuel crypto rewards simply by watching live streams and videos. As you watch and share with others, you're contributing to the decentralized Theta Network, all powered by Theta's native blockchain. Discover the future of video delivery at thetanetwork.org.